guidance, and the guidance is second half of fiscal 2025, things start to re-accelerate, and AI kicks in a bigger way.
It raises the question of how much patience do people have with investment if they have the promise of it paying off in a big way just later down the road. It seemed to temper some of the sell-off, but not entirely, as people do have very high expectations. And just to be very clear for those who are listening to Dan Ives, this isn't the view from the haters. This is just sort of one perspective, that there's been a lot baked into the incredible record rally of big tech, and people are looking for excuses to cash in. This isn't a matter of people hating on the AI trade or hating on Microsoft or saying it's going to fall out of bed. It's more just people who are maybe looking to buy other things ahead of perhaps some sort of broadening out that people believe in.
And Microsoft just sort of pairing losses from yesterday. We're still down by close to 3%. Dan Ives of Wedbush suggesting that by the time we get to the close later, he'd be shocked if that stock was still negative. He's looking for a positive number a little bit later.
Well, that was his excuse for not dressing like you. I think that was the point.
He wore pink instead of wearing black.
Yeah, which he didn't even know.
I tell you what, that first day, I'll have that suit ready for him. All black, black tie, something super depressing. Sort of downbeat. Dan never used to dress this way, by the way.
I know.
This was a new thing, a post-pandemic theme, all the bright colors, the greens and the pinks.
Yeah,
didn't used to be like this.
It makes him feel solid. He actually had a limited edition sneaker that was related
the same
to something
thing.
Related to, I don't know.
Dan Ives is bullish.
Thanks.
That's the headline from about an hour ago, okay? We love Dan. I want to turn to this story, the BOJ, before we get knee-deep into the Federal Reserve. I think we've all had it sort of up to here with the Federal Reserve over the last few weeks. The BOJ, rate hike, the plan to halve bond buying announced overnight as well. And also, I think the guidance is more important than anything based on what I've heard from the BOJ in the last 12 hours. They're going to go again, potentially, and the bar to go again is pretty low.
Yeah, basically, someone asked them, is 0.5% your ceiling for how high Japanese rates could go? And they did not indicate in any way that it was. The surprise aspect of this was notable. Only about 30% of Bloomberg, people surveyed by Bloomberg, thought that the Bank of Japan would make a move today. Why? Because actually the economy isn't that supportive based on where it was even a month ago. You see a deceleration in the consumer spending. You see a deceleration in consumer sentiment because of the higher cost of living. Why? Because of the yen and how weak it is. So how much is this kowtowing to from the Ministry of Finance and not necessarily something related to the economic picture?
Dollar yen down to 150.35. You're enjoying that, aren't you?
I really enjoyed banging on this table.
I did too. 150 and really close to breaking that level a little bit earlier. I think we should sit on the Federal Reserve just for a beat, or maybe a couple of beats. The Fed looks like it's becoming increasingly comfortable with the outlook for inflation. I think we have to recognize what Neil Dutter of Renmac is talking about here. Do they have a reason to become increasingly uncomfortable about the labor market? And we're starting to see this shift. Just the balance around the dual mandate, the shift away from inflation towards the labor market. And is this another step towards placing a little bit more emphasis on insulating the labor market as the year progresses?
In his comments, he basically said businesses are not desperate to find workers and workers are not desperate to leave jobs. You look at a peripheral survey to yesterday's consumer confidence data, and it showed that that consumers are expecting to spend much less on just disposable types of items or trips to, say, Disney World or Taylor Swift concerts. People are going to pare back some of that discretionary spending. This is making the likes of Neil Dutter take notice.
Or coffees at Starbucks, et cetera, et cetera. The list kind of just goes on and on and on. That's the latest on the consumer, the latest from the Federal Reserve, the BOJ, and a whole lot more. Let's turn to the scores. I mentioned the S&P positive by 0.9%. Bond yields have been shifting lower over the last week. We're down again on a 10-year by a basis point. These are levels we haven't seen since early March. A break of 4.13 on a 10-year, 4.12.97. Coming up this hour, we'll catch up with Emily Rowland of John Hancock following disappointing results from Microsoft, Henrietta Trays of Vader Partners as Harris gains ground on Trump in our new poll, and Leslie Falconio of UBS as traders await a Fed decision. We begin with our top story. Stocks rebounding ahead of the Fed and more Mag 7 earnings. Emily Rowland of John Hancock writing the following: this is a sentiment-driven market, rotation based on potential political outcomes as the earnings backdrop is on another planet. Emily joins us now for more. Emily, it's good to see you.
You too.
You called it the least relaxing month in years. Is that what it's felt like the last month?
I mean, I thought July was supposed to be about going to the beach and taking vacation, and now, especially if you've been short small cap equities, it's been the least relaxing July on record, and we look at this rotation into small caps, and to us, it's like a checklist almost. Why is this happening? You know, you look at earnings trends, they haven't changed. In fact, large cap earnings are up or tracking to be up about 10% year over year this quarter, where small caps are coming in at negative 18%. So this entire rotation's been based on multiple expansion and nothing else, the entire 10% gain. So we look for things like rates. Yes, the 10 years move lower, not that much lower, and small caps used to love rates coming in lower. The earnings trends haven't changed. We've gotten 2 months in a row of lower inflation readings. We're still in a late cycle environment, so process of elimination will tell you that it's really based on the increasing odds of a Trump presidency and the potential implications of the policy changes based on that.
The position squeeze seems to have taken on a life of its own over the last few weeks. Are you questioning how durable this move? Is this something you want to step in front of, given how powerful it's been?
We would fade it. You know, momentum can always carry trades like this higher, but we look, for example, back at what happened in 2016, and small cap equities ripped right after the election. We actually looked at the performance of small versus large over a 1-month period right after Trump was elected, and they outperformed by 13% in a month. And then that trade moved sideways for 2 years. So I think that there's a lot that's already in the price, and we would consider kind of fading the rotation and continuing to emphasize higher quality stocks.
Is there something within earnings that gives you pause, that tells you that they're on a different planet than some of the sentiment shifts you're seeing in the market?
Well, again, it's about small cap earnings actually coming in negative or tracking for negative returns this year. There's so much excitement right now around this potential Fed cut and potential rotation. The challenge for small cap equities is it's actually not great. We have to remember that the Fed's cutting because inflation's coming down and because, importantly, growth is decelerating. These companies have a lot of leverage. They've got high interest burdens. They're lower quality. They're going to still be contending with the higher cost of capital, and we don't think that that's your best foot forward as an investor heading into this potential economic contraction or at least extended late cycle environment.
So it sounds like you disagree with Laura Rame, who thinks that really the risks are balanced, that you still see some inflationary pressure that has come off the boil, but that you do still see that as an equal risk with some of the deterioration in the labor market. It sounds like you are seeing a more pernicious trend underpinning some of the jobs reports that we've been getting, both peripheral and main.
Right, everything's fine right now, but we try to think of the time to repair the roof is when the sun is shining, and these cracks in the labor market are continuing to form. The JOLTS report was a little bit better than expected yesterday, but still seeing hiring slowing. We'll be looking at initial claims, of course, still kind of in that range of 200 to 260. I heard Laura say if they got towards 300,000, she'd be concerned. So would we. And then continued disinflation, that's great, but again, it comes along with slowing economic growth, and you see it in things like PMIs. We got preliminary PMIs for 7 out of the 8 large countries that we watch, and they were negative for most of them, below 50. We talked about Japan earlier, that's below 50. The US is slowing. So economic growth is absolutely decelerating. Things are fine for now, but why not to take advantage of opportunities where markets are mispriced for a slowing economic growth environment?
Elisa mentioned Mike Dada earlier from MKM Roth. Mike Dada was brutal in that note release yesterday afternoon. I'll share just a snippet of it with you, just a little bit more. Bye-bye soft landing. It was nice knowing you. To suggest that the S&P 500 isn't priced for such an eventuality is an understatement of epic proportions. Goes on to say, gets a whole lot worse as you work through the note if you're a bull, that's for sure. We may be finally entering a bad news is bad news environment with analysts' double-digit earnings expectations for the next 12 months looking increasingly out of sync. I think that's in sync with some of what you're saying. The bad news environment that we're about to enter. Are we sitting here saying we're going into Friday, which maybe is the most important event of the week, aside from the Federal Reserve? Its payrolls on Friday morning. If we get a bad print there, can you just define what is bad and how this market would respond to it?
Well, it's so complicated to figure out what's bad because the last couple of months we've gotten these great headline readings, and then you look underneath the surface and there is something more sinister happening. Look at the revisions we saw, 111 negative revisions the last 2 months, and you look at things like the household survey, which showed massive deterioration in the labor market. So you've got to look underneath the hood. I don't want to say I'm overly bearish here. We're certainly not. In fact, one reason that we're not is because we're extending this late cycle environment through a ton of spending. The CBO just revised their expectations for the deficit this year, and it's at $2 trillion, 6.7% of GDP. So we're paying for a lot of the economic growth that we're getting, and that could continue for some time. But again, it comes back to looking at what assets are priced for this environment and which ones aren't. You know, I always want to go to bonds.
Sure.
And we'd be looking at any backup in bond yields as an opportunity to capture a mispriced asset. Remember, the 10-year Treasury yield started the year at 388. We're still higher than that right now. So that's where we would be looking to capture that income as we do head into a more challenging environment.
Emily, this was great. Emily Ronan there of Jan Hancock, just on a series of themes there that I think we've heard repeatedly from the South Side, from a lot of people, strategists alike. Peter Cheer wrote this, Lisa: the Fed is fully priced. Consensus on the economy may be too rosy. It's not about your base case, it's about what we've been pricing increasingly. And what I've just heard from Emily there is we're pricing increasingly this soft landing, a broadening of the equity market, participation increases, small caps, et cetera, et cetera. Fed's pretty well understood at this point. At least we think it is. We're going into September, it looks like they're going to reduce interest rates. What's less understood is what is happening in the labor market here, and there's huge division on Wall Street around that issue.
Especially because you have contradictions and you have just a bigger population and the influx of immigration that have really complicated some of the numbers and the understanding of what some of the numbers should look like to be positive or to be negative. What we're looking at right now is the balance of risks, as you pointed out, this idea of what is the market pricing in? Seems like a soft landing. So are there more risks to the downside than to the upside that people are kind of hooking into right now? Is that what we're getting from some of the consumer companies? That, I think, is really the question that a lot of people are asking.
Still got Mohammed sort of sitting on my shoulder, Al-Arian, saying, listen to the companies, don't look at the data, listen to the companies. And a lot of companies are coming out in corporate America and telling you that things are slowing down and they're losing pricing power. Equity futures moving in the other direction. We're positive here by almost 1% on the S&P 500. There is a bounce here. The mood around tech improves overnight. Let's get you an update on stories elsewhere. With your Bloomberg Brief is Danny Berger. Hey, Danny.
Hey, John. Uber is teaming up with Chinese EV maker BYD. The plan, put 100,000 of their EVs onto Uber's platform. It's a multi-year partnership and offers drivers lower vehicle pricing and financing. Notable in the deal, however, is that it excludes the U.S. Instead, it will start in Europe and Latin America and expand to the Middle East, Canada, Australia, and New Zealand, according to a statement from the companies. Intel shares higher in the pre-market, 2.33%. The chipmaker announced it's cutting thousands of jobs to trim costs and fund an ambitious turnaround plan. Sources say the reduction may be announced as early as this week. Intel is set to report earnings on Thursday. It's been spending heavily on R&D, all to accelerate its tech and regain market share. Venezuela's government has hardened its stance against protests over President Nicolás Maduro's self-declared election win. A senior figure called for the arrest of opposition leaders, while Maduro used a speech to accuse them of leading a fascist conspiracy involving the U.S., drug cartels, and Elon Musk. Separately, Maduro told a Brazilian official he would release the full voting records within days after the opposition said it had hard evidence of fraud. And that's your Bloomberg Brief. John.
Quiet Summers. No. Danny is going to be back with us in about 30 minutes. Up next on the program, Harris closing the gap.
Well, Donald, I do hope you'll reconsider to meet me on the debate stage. If you've got something to say, say it to my face.
That conversation up next, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Today, the Fed decides.
You said summers were quiet. I don't remember the last quiet summer.
We're talking about the data not being as accurate during this time of year, an election that's haywire.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Is the answer here, Jeff, that everything is just plain solid?
It's pretty solid, Tom.
At some point, we got to call it a soft landing.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Getting the band back together for the Fed decision a little bit later. TK will be in the studio. That program kicks off at about 1:30 Eastern time. I think we're all looking forward to that. Here's a flavourer, snapshot of the price action for you. I want to start with the 10-year. The 10-year yield down for a fifth consecutive session. Have not seen this since early June. We're down another single basis point. 4.1316 on the US 10-year. Haven't seen these levels since early March. That's the story of the bond market. Equities with a little bit of a lift here, up by almost 1% on the S&P 500. Some good stuff to talk about in tech. We'll talk about that a little bit later. Under surveillance this morning, Harris closing the gap.
The momentum in this race is shifting. And there are signs that Donald Trump is feeling it. Well, Donald, I do hope you'll reconsider to meet me on the debate stage. If you've got something to say it to my face.
Harris with some real momentum. The latest looks like this. A new Bloomberg and Morning Consult poll showing Kamala Harris closing in on Donald Trump's lead across all 7 swing states. The biggest gains coming in Michigan and Arizona. Henrietta Trays of Veda Partners writing this. Kamala Harris's entrance into the race has brought the Democratic ticket to highs not seen all year and leveled out the 24 election. Our forecast still anticipates that Donald Trump will win the election with 60% odds to Harris's 40. Henrietta joins us now for more. Henrietta, I want to get into something Lisa and I have been talking about for the last 2 weeks, or at least the last week. This has felt like what we would call in equity markets a position squeeze, that the old CEO has left and the short positions on the Democratic stock have come off. I want to understand if it's more than just that. Are we starting to see some real momentum that could last as we go through Q3 and into Q4?
I think there's a lot of reason to anticipate that this is momentum that has not peaked yet. I'll give you a number of reasons why. First of all, there was an actual election in Arizona last night. We've been tracking it for the last 2 months, but it's a primary election that Carrie Lake, the Republican candidate on the Senate ticket against Ruben Galeo, a more progressive Democrat than Kyrsten Sinema, who is retiring this year. Carrie Lake is very close to Donald Trump, tours with him regularly, goes to Mar-a-Lago, goes to the White House, etc. And she only got 53, I think, % of the vote, which means that amongst Republicans, 47% of Republican voters voted against her last night. That is a trajectory shift in a critical swing state that your polls as well laid it on and pointed to hard, confirmable actual elections as opposed to even just polling data, which is the best we can do right now, suggesting that independent voters and moderate voters are trending away from Donald Trump. And that's something that you showed up in swing states across your polling last night, and others did as well, including in Pennsylvania, another critical swing state. Effectively, everywhere that Trump was ahead, he is now declining in, and Harris is on the surge upward.
The opening that you just described in places like Arizona, do you think those kind of developments influence the VP pick in the coming week?
Well, it's my pet belief that Mark Kelly will be the vice presidential candidate. I don't have any special insight there. But to me, You are not going to get a tremendous move from the VP pick in either direction. JD Vance may be an example of how we could be wrong there. His negatives have increased pretty substantially. I think he's negative 15 right now. That might be a drag on the ticket, particularly with female voters. But for Mark Kelly, I mean, you really don't need to read too far into it, as my colleague Spencer Perlman likes to say. I mean, they're talking about a naval fighter, an astronaut, gun violence survivor with his wife, Gabby Giffords. It's pretty much a no-brainer. But even voters in Arizona will say that it's not going to move the needle for them. I believe the polling is at 60% of people in Arizona say picking Mark Kelly won't move the needle. I think it's a more broad national approach, specifically on immigration, that leads me to think that Kelly is the candidate that Kamala Harris would choose.
Henrietta, you just gave a lot of reasons for why this kind of has been a changed race. Why do you see the outcome being the same?
Because I don't have enough data yet. It's really very fresh. The Bloomberg Morning Consult data is the best and the latest and the only data that we have across all swing states since Kamala Harris joined the ticket. So it's going to take a lot more of that to convince me. And as my clients know, I have a very aggressive incumbency bias. For our purposes now, I believe that the incumbent in this race is Donald Trump. And I need to see the Democratic candidate, particularly in the Electoral College, pull ahead 2 to 4 points in all of those states consistently in order for me to change any of the races. So I'm looking very closely at Nevada, at Georgia, obviously at Pennsylvania, but I think Arizona is moving in the direction that Kamala Harris wants to see. Donald Trump's best luck is on Pennsylvania and North Carolina right now.
John, I love that Donald Trump is the incumbent, and basically Kamala Harris is not being considered as Joe Biden's kind of surrogate in any kind of way.
What do you make of that? Because I remember when Joe Biden stepped down, we did a special in the evening, and the first question we all asked about Kamala Harris is how much distance she could put between herself and Joe Biden.
Well, that's exactly the question, Henrietta. I mean, how much distance is there? Isn't it fair to say that she's essentially the incumbent policy president, or does she really represent an independent voice from Joe Biden?
Yeah, no, she's definitely a different candidate, and I would love if this race were about policy, but we haven't gotten there yet. I mean, whenever we get to tax policy, I'll be thrilled. But at this point, it's really the change is in Democratic activation, specifically with double-digit gains for the Democratic ticket, plus 25 with Black voters, plus 24 with Latino voters, huge gains with female voters, double-digit gains with youth voters. It's a new ticket, and she's not the incumbent because it's brought a brand new basket of voters to the field. There was a slight uptick in Democratic voter registration in North Carolina in the last week, for example. So it's not that there is a policy shift, it's that this is a fresh face for the ticket. You can see it in her approval ratings, which have changed faster than any candidate I've ever seen.
You know the most ridiculous thing about all of this, Henrietta? This was the objective all along, to have the early debate, to engage the population, to drum up the enthusiasm, to get people engaged early. This is just not how we thought things would turn out. It was the objective of the Democratic ticket, of course, but we thought on the ticket at the top would be Joe Biden. And of course, Lisa, the debate went in a different direction, and ultimately the outcome's been the same, but with a different name on the ticket. It's amazing, isn't it?
And we're talking instead not about policy. In fact, that's kind of lost the stage. We're instead talking about weird and getting fired up. And
Henrietta, can I jump in just quickly? When will we talk about policy? We've seen a massive change in this election race, and Kamala Harris has gone on some scripted rallies, which I get it, drumming up loads of enthusiasm, but when do we start to hear about actual policy?
Never. I imagine it won't get around to that. I mean, at the best case, we could say after Labor Day, when people come back from vacation, we'll start to tune in. But the immigration and maybe fentanyl are areas where I think Trump has a really good chance of slamming Kamala Harris and taking away some of her early and hopefully for him not locked in gains. But I don't see a race between Kamala Harris and Donald Trump talking about, capital gains tax rates or corporate tax rate. I really just don't see that happening. I think it's more about the top of the message. The gender divide is probably the biggest indicator of that. The largest divide in the electorate right now is between men and women.
Interesting. Henrietta, thank you. Henrietta Trace there of Vader Partners. The answer there, Lisa, depressing for you, I know. The answer was never. Never.
that's horrible. I reject that people. No, come on.
I know.
It's just sort of frustrating to me. It's sort of cosmetic stuff. It's sort of, dog whistles. And let's have real substantive conversations about how to make the country work better.
I hope that will change in the coming 3 months.
Maybe it will.
Let's hope it does. From New York, this is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Equities look like this, pushing higher by 1% on the S&P 500. There's a rally here on the Nasdaq, up by 1.5. Lisa, I'll give you a choice of three. The guidance from Microsoft that things re-accelerate in the second half of 25. AMD knocking it out of the park. Or the Reuters story, which I believe we've matched here at Bloomberg, that there is potentially going to be some exemptions for some of the exporters coming out of the Netherlands, South Korea, and others as well, going to China for the chip makers.
Well, I'm not sure exactly what policy is going to be put into effect with trade. So I don't want to basically say that that necessarily is the full driver. I would say that AMD actually was most notable. I would say that actually stands out, considering the fact that that was clearly sort of the catch-up kid for a long time. And it seems like it's catching up with orders that greatly exceeded expectations and real optimism from Lisa Su. So that, to me, almost represents something more significant than, say, something having to do with sanctions.
Yeah, the guidance kind of lifting all boats from both AMD and Microsoft. NVIDIA got an upgrade as well. I'll talk about that upgrade a little bit later on the program. NVIDIA up in the pre-market nicely too. So that's the equity market. Let's turn to the bond market and sit on the 10-year. 5 consecutive sessions of lower yields on a US 10-year yield. We're down another basis point, about 0.6. Let's call it half a basis point, Lisa, 413.36. But this is the trend over the last week or so. We're down to levels we haven't seen since early March, going into this Fed decision later on this afternoon.
You nailed it. You said that basically earlier when we were speaking, that frankly, this is a Goldilocks type of rate cut still being baked into the market, that you're seeing all denominations yields come down, but you're still seeing a generally less inverted curve over the past few weeks. This raises the question of, if the Fed cuts, is it going to be for the right reason? I am curious to see how they set up the rate cut that they're expected to make if they don't cut later today, which almost no one expects them to do.
Yeah, we're just looking for that extra baby step. And if they are unsure about September, they've still got Jackson Hole to really firm this up and wait for more data. I want to go back to something that Mohamed El-Erian's talked about repeatedly, and I think it's a worthy conversation. He's not just talking about July, he's talking about the risk of not moving in September. And I think we have to ask the question, why are we even having that conversation? What's the risk they wouldn't move in September if they set it up today to make a move? Surely they'll go in September. And the point that he's made, and others too, I think is a valid one. He thinks this Federal Reserve has become too data point dependent, which is something now Neil Dutta has talked about as well. And there is a risk here, a real risk, that yes, they might set you up incrementally to do something in September, but they could be one fluky, hot CPI print away from backing off again and missing a window.
Well, remember what happened with the ECB, that they pre-committed to a rate cut, and people thought, why are you doing that? Because the data might not cooperate, and in fact, it didn't cooperate, and they still went through with that rate cut. Will the Fed execute something similar, or will they say we will be dependent on those noisy prints? Very difficult to say, especially because the data has not been reliable. We have seen so many backward revisions that have been, frankly, showing a weaker economy than first released. Almost every single time we've gotten a revision, it's been downward. So I take Mohamed's point. I think a lot of people are concerned about that. Certainly, I imagine Neil Dutta would be sympathetic with that view. The issue now is, how exactly do they justify not going in July and pre-committing to something just a couple months away?
Federal Reserve decision later on this afternoon. Need to talk about the BOJ. Let's bring up dollar yen. Dollar yen gapping lower. Lots to talk about here. A rate decision, bond buying guidance, and forward guidance around interest rates. Rate decision, they hike. Bond buying guidance, that's set to half, going through to 2026. Forward guidance for interest rates, they're set to hike again. And this is what Evercore picked up on too, like the rest of you. There are strong signals there is more to come. Dollar yen lower to about 150 this morning.
Operation Make the Yen Stronger. That seems to be what this is, because it's not necessarily in response to screaming and, inflation or some sort of excess that they're seeing anew in the economy.
I think it's interesting here, Lisa, what replaces the Japanese bond buying if that bond buying starts to come home. The BOJ, as you know, we've talked about the JGB market, and we've used the word market loosely for years because it's not much of one. The BOJ owns more than half of the JGB market, more than half of outstanding Japanese bonds. If they back away, and they've flagged it pretty strongly what's going to happen over the next 18 months or so, if they back away and that bond buying comes back home, away from spots in Europe and a little bit of US buying as well, who is going to replace that bond buying? How much more weight do we have to put on domestic buyers here in the United States?
This is the main argument for why people pay attention to bond auctions in the United States, because there has been this huge Japanese bid, and it's not just government bonds, it's also credit, in particular investment grade bonds, that Japanese buyers have been huge bases for. If they step back and are ending up sucking up some of the debt that they have coming out of their own country, do you have to see an increase in yield sort of de facto just to attract that much of a bigger buyer base? Can domestic buyers really take over that?
That's the latest on Japan. Just getting some news on Boeing. Lisa's going to go through that. I'm just going to go through some top stories for you while we work through these headlines. Under surveillance this morning, tensions rising in the Middle East. Hamas saying Israel killed its political leader in an airstrike on Iran's capital. Iran's supreme leader saying Israel should prepare for severe punishment in response. In response to that, we're seeing Iranian crude on both Brent and WTI. Brent and WTI, as you know, over the last few weeks has been declining, but that's bouncing off the back of some of these strikes in the last 24 hours. We talked briefly about Microsoft. Let's give you a recap. Dropping in the pre-market after the company delivered disappointing results. Fourth quarter cloud revenue missing expectations, testing the patience of some investors anxious to see investments in AI pay off. After about today, we get Mag 7 earnings continuing with Meta. It's worth saying that for Microsoft, yes, they missed on cloud revenue. Yes, it was a bit softer compared to where we were last quarter quarter, and yes, it will continue this quarter, but the guidance is as follows, that in the second half of fiscal 25 for this company, things start to accelerate again, and the contribution from AI is picking up as well. So things are getting better. I think for the Dan Ives, Wedbush crowd, the bulls around this story, they're still bullish this morning, even with this pullback on Microsoft by 3.6%. A third and final story for you before we get to Boeing. Sources telling Bloomberg the Biden administration is planning to exempt chip equipment makers from Japan and the Netherlands from upcoming export restrictions in China. Adding that the plans are fluid and might still change. We've got shares of ASML and Tokyo Electron jumping on the news. Tokyo Electron up by 7.4%, ASML up by 5.5%. I promised you an update on Boeing. And Lisa, we've got a name to replace Dave Calhoun.
Kelly Ortberg. He is the CEO who is replacing Dave Calhoun. He is a retired veteran of the aviation industry. Basically, currently, he is an engineer who rose through the ranks to become CEO at Rockwell Collins. That is an aviation supplier that's now part of RTX Corp. Either way, it seems like shares are gaining on the name. We actually have someone who is going to replace Calhoun after a series of incidents that has left Boeing very much flat on its back in terms of its current position. It came out with second quarter revenue below estimate, $16.9 billion versus the estimate of $17.5 billion. Talks about increasing debt more than expected and continuing to issue debt. This is the issue, though, that I think is giving some optimism. There is a backlog that includes over 5,400 commercial airplanes. The demand is still there. It's just a matter of how they can get it back up and running without some of the kinks and the challenges that they've been seeing over the past few years.
Important difference here, Kelly, and not Larry, right? Because for a while it was Larry Culp, and now it's not.
Well, Larry Culp said that he had 101% surety that he was not going to be CEO at Boeing and that he was very happy where he was. We do have a name. We are going to be exploring who that person is. There is a sense, though, that they are moving forward. The fact that they had that uncertainty hanging over them, I think every analyst who came on said, it raised a question, how far along are they in terms of assessing what they need to do?
That's the latest on Boeing. The stock is up by 2.3% in the pre-market, pushing 3% higher as I speak. Much more on that still to come. Elsewhere, Treasuries rising ahead of today's Fed decision. Leslie Falconio of UBS writing this. The market once again appears to be getting ahead of itself. While we anticipate a terminal rate of around 3.5%, the market is pricing in 3 cuts in 24 and over 4 in 25. We would not add duration at this level. Leslie joins us now for more. Leslie, just breathe some life into that. Build that out just a little bit more. Why do you think this market's getting ahead of itself? What do you see that you think others should be looking at a little bit more closely?
Well, I mean, I think in typical fashion, I mean, the fixed income market is forward-looking and the Fed is backward-looking. So when we think about what's happened in terms of inflation coming down, the labor market loosening, and, the belief, and we believe this as well, that the Fed will focus on more of a dual mandate, the cut is coming, and we believe it will in September. But because, we've started to see some weakening in the data, and again, we believe the data will be weaker, not weak, the fixed income market has a tendency to get a little bit ahead of itself. So now it's already pricing in, close to that terminal rate of 3.5. It's assuming the Fed's going to cut 3 times in, 2024. And there was a point in time that it actually was pricing in the potential of a 50 basis point cut. Now, we don't see in the data, and we do believe in soft landing, we don't see in the data any reason why there should be any type of emergency cuts, particularly after what we saw at GDP, after retail sales, or there needs to be a 50 basis point cut right now. I mean, maybe a year from now, maybe if they hold off a little bit too long, that you have to see those kind of emergency cuts. But again, the market has a tendency to get ahead of itself. Then sure enough, it reassesses, it reprices, and then yields move higher.
I'm going to sound like an auctioneer, but you don't like 10s at 410. Do you like them at 425, 450, 475? What kind of numbers, Leslie, are you looking for?
Yeah, we are definitely the buy the dip mentality. We have been the buy the dip mentality. I mean, the 10-year's actually been in a range of 4 and 4.5 for a very long time. And at 430 to 450, we would definitely add, and we did. I mean, we bought on this dip. But now when we think about where the 10-year is, and more than likely, assuming that Powell isn't overly hawkish in Q&A, you have a tendency to, rally into the meeting. It is month end. So you actually could see yields go down a little bit further here, but I definitely wouldn't add interest rate risk at this level.
Leslie, there's a question about the why. Is this inflationary pressure that's currently in the system, or do you think that the 2 non-recessionary rate cuts that you're expecting for this year will allow inflation to kind of simmer at a higher level for longer, that will kind of get people's attention and realize, this kind of puts a floor under how low the Fed can cut rates to?
Well, listen, I think we have to keep things in perspective. We're talking about a Fed fund rate that's been at 5.33 for about a year. You know, a 50 basis point cut isn't something that's going to create the sudden accommodation or, you know, move the real rate, which has been restrictive, that much lower. I do think it's preemptive because we are seeing this loosening in the labor market. And we do believe that inflation will continue to trend lower, you know, given that, you know, the nuances that we've seen in OER. We do expect those to come down. But I don't think that, a 50 basis point sort of insurance cut is something that's going to be incredibly stimulative to the economy.
How much do you think that this kind of Goldilocks environment with non-recessionary rate cuts keeps supporting credit, given how far the rally has gone, given the fact that the commentary from companies has really highlighted consumers are pushing back, they're not accepting prices, and they're restricting some of their spending?
Yeah, I mean, I agree with you. I mean, there's definitely, when it comes to, consumer spending, they're definitely being more selective. And I have to say, I mean, when we look at lower quality credit, things like high yield, the lack of volatility in that sector is a bit concerning, in my opinion. I mean, it's moved 40 basis points, from high to low in the past, say, 5 months. That's the lowest that we've seen since 2006. And not only that, we have a lot of investors continuously going into that lower quality sector, not the triple C side, because that's been lagging, but even things like a B to a double B is incredibly tight. So yes, the risk to that is that the economy actually slows more than expected because people are pricing in this Goldilocks scenario. Now, when you think about historically, when we have these sort of shallow cuts, right, when the few times in history where the Fed has been cutting without a recession, normally what happens is that spreads going forward stay fairly range bound, or they widen about 40 basis points. There's nothing that is, a big, headwind to total return, but there's no question, the relative value within fixed income on a spread perspective is scarce, but it's yield and it's interest rate risk that really dominates total return. But that's why we like the higher quality, because we just don't think you're being compensated enough for lower quality.
This is what Amanda Lynham essentially said from BlackRock a little bit earlier this week. Leslie, appreciate the perspective. Thank you. Leslie Falcone there of UBS. Credit spreads are still tight. They've been gapping just a little bit wider over the last few days, but high yield spreads, Lisa, still in at around 310 basis points. Historically, as you know, better than most. That's still pretty tight.
Yeah, and especially at the higher end of high yield. I think that this is actually important, and it sounds like parsing hairs. It's not. That the higher end, higher quality high yield bonds, if you will, have been doing phenomenally well because those companies are stronger than they used to be. The lower quality ones are seeing a much harder time borrowing money. There is definitely a discernment by investors in terms of the companies that can make it and those that can't.
And that's the latest on fixed income. Need to get you some corporate news, including an update on the latest with Boeing. With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Starting with politics, Vice President Harris is focusing her campaign on the issue that Donald Trump has been looking to use against her, border security. At a rally in Atlanta, Georgia, Harris said the former president helped tank a bipartisan bill in Congress earlier this year. Harris is planning to tour 7 battleground states next week with her new running mate. She hasn't picked one yet, but a source tells Bloomberg News that she is going to do interviews this week. Harris's VP shortlist is said to include Pennsylvania Governor Josh Shapiro, Minnesota Governor Tim Walz, and Arizona Senator Mark Kelly. NBC Universal says ad revenue for the Paris Olympics has surpassed the record $1.25 billion sold for Tokyo's 2020 games. A person familiar with the company's ad spending tells Bloomberg that strong ratings have translated into greater demand for the unsold inventory that NBC brought into the games. Primetime viewership so far has averaged 33.8 million viewers. That's up 77% from Tokyo, likely due to favorable U.S. time zones. And let's get you those Boeing breaking lines you mentioned, John. Boeing shares rising 3.3% after it announced industry veteran Kelly Ortberg as its new president and CEO. He will replace Dave Calhoun, who announced he's stepping down at the end of the year. Ortberg ran one of Boeing's biggest suppliers, Rockwell Collins, until 2018 when it merged with RTX. He then acted as an advisor to the RTX CEO before retiring in 2021. Boeing also reported its earnings in the release, saying that revenue in the second quarter fell short of estimates. And that's your brief, John.
Danny, thank you. Stock is higher by a little more than 3% in early trading. Up next on this program, chip makers getting a boost.
What's the one thing that could spoil the AI party? It's not Fed, it's not valuation. It's about restrictions. It's about basically like what we see on tariffs and ultimately this U.S.-China cold tech war that's playing out.
We'll get you the latest reports up next from New York. You're watching Bloomberg TV.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Stocks look like this on the S&P 500, up by close to 1%. The rally continues through this morning. Yields are lower by a single basis point. This is a fifth session that the 10-year Treasury has been rallying and yields have been dropping. We're down by almost 2 now, 412.39 on the US 10-year. Under surveillance this morning, chip makers getting a boost.
What's the one thing that could spoil the AI party? It's not Fed, it's not valuation. It's about restrictions. It's about basically like what we see on tariffs and ultimately this US-China cold tech war that's playing out. Just keeping that tightrope where you want to sound tough and obviously in terms of what's playing out, very significant for ASML.
That balancing act continues. So here's the latest. This is what we've heard this morning. Sources telling Bloomberg the United States is preparing to exclude semiconductor equipment makers in the Netherlands and Japan from restrictions targeting China. Shares of ASML and Tokyo Electron are higher. The potential carve-out leaving room for them to keep selling to China. Bloomberg's Mike Shepard joins us now for more. Shep, let's talk about that balancing act. What are we hearing here at Bloomberg and what are we expecting from the administration?
A balancing act is a great way to put it because the administration and members of Congress are under such pressure from their constituents around the country to get tough on China, to make sure that the world's second largest economy doesn't make too many leaps when it comes to advanced technology, and that includes semiconductors. Part of the concern, naturally, is economic competition, but there's another underlying concern about national security. So we've seen the administration unfurl over the past few years a series of increasingly tough export restrictions, and it's been preparing to invoke this kind of wonky sounding rule called the Foreign Direct Product Rule. It sounds innocuous, but it is one of the harshest trade measures out there. And what it means is that restrictions could apply even if a product is made overseas, made by a foreign flag company. Restrictions could still apply if a certain amount of technology in that good is U.S. origin or comes from the U.S. So it just gives you a sense of the heightening scale. So what we're seeing now is there is a carve-out in the works for Japanese and Dutch companies. And that's a big deal, especially for Tokyo Electron and ASML. They are two of the biggest makers in the world of advanced machinery used to make chips.
Shep, I just want to understand, and forgive me for being blunt, are we here this morning because the Japanese and the Dutch just turned around to the Americans and said, no, you're not doing that?
That's blunt is maybe a good way to describe how you characterize it, but I don't think it's off. The Japanese and the Dutch have been expressing a lot of concern to their American counterparts about the impact potentially of this kind of a measure, not only in their companies, but on their country's relations with China. If they had adopted this, that would not only hurt the ability of ASML and Tokyo Electron to sell their goods, their machinery, into the world's largest market, the consumer market, that is, for chips. China is building so many chip plants and trying to produce for its own electronics industry. It is the world's second largest economy. But also, if the Netherlands and Japan had gone along, it would put them in bad stead with Beijing and really maybe subject them to some sort of retaliation from China as well.
Mike, can we actually, though, look at this potential loosening in the restriction as allowing the likes of ASML to just sell to Beijing freely?
They are not off the hook. And I'm glad you asked that, Lisa, because you could interpret this move as like, oh, well, we'll just forget about it. I would expect, and certainly our reporting indicates, that the Biden administration will continue with some form of export-related controls that would apply to these companies, but to a degree to which the Japanese government and the Dutch government have agreed is acceptable, in consultation with those companies, too. We're not exactly sure what shape or scope those measures will be, but it won't be this drastic form known as the Foreign Direct Product Rule.
I gotta say, Mike, I saw the Biden administration loosens restrictions, and I think to myself, how long is this process, and will it still be the Biden administration when it gets through?
Well, and hanging over all of this and over this conversation right now is the U.S. election. What will the course of policy when it comes to technology and export control specifically, should there be a change of administration from Democratic to Republican? If former President Donald Trump manages to succeed in his comeback bid, how will they pursue all of these kinds of measures and these efforts to keep the most sophisticated technology, including chips, out of China's hands? And will they re-invoke these kinds of measures and aim them squarely at ASML and Tokyo Electron and some other companies of that nature? And what will the impact and effect be? And are those governments also talking already to Republican counterparts in Washington to maybe stave that off? And there also may be a change if Kamala Harris is elected president. Will her administration take the foot off the gas if she ends up in office? Those are questions that we're still reporting out. And it'll be interesting to see where we end up come January.
The Dutch and Japanese heads are spinning as you speak, Mike. Thank you, sir. Mike Shepard there of Bloomberg. Off the back of our original reporting a month or so ago on this story, on the prospect of this rule going through, we had these questions as well. Doesn't this all change in the next 6 months, depending on who wins in November? This is a story, I think, which underlines the difference between the European approach to China and the US approach to China. Get a real sense that the Dutch just turned around and said, nope, we do not want this. And we saw that in some of our reporting as well. The United States is going one way and the Europeans don't want to come along for the ride. China's well aware of that, and China's looking to exploit the differences. And you pointed this out earlier this week. Where was Giorgia Meloni this week? Where was the Italian PM? The Italian PM was over in China meeting with Xi. They have a very, very different approach to China in Europe than we do here in the United States.
They have a very different reliance on China as both a supplier as well as a buyer of their products than the U.S. does. The U.S. is more independent economically than Europe from China. You just start to wonder, okay, you want to take a hard line if you're a U.S. politician, at least politically, in debates, et cetera, and yet in reality, how do you do this? Go to a company that's domiciled in Europe and say, you can't sell your products to Beijing at the risk of our national security, and hey, guess what? You need to get on board because it's your national security too. It shows how complicated this is. I'm wondering what levers some of these international tech companies are pulling. We're going to, charge you more money. We're not going to sell to you. We're going to demand that you offer us some consequential, ramifications for this. This is not going to be easy, whoever becomes president.
We've said this a few times, that US tech CEOs have to become diplomats, and I think that applies to global tech CEOs as well. Some CEOs have been more effective at this than others. I think of Tim Cook over at Apple. Mark Zuckerberg, it feels like, is just getting in on the game recently over at Meta. When he sat down with Emily Chang and he called Trump, called the former president badass, you just got the feeling that he's starting to understand the game a little bit. Yeah. And you've got to play things from both sides.
Basically, you can't have somebody hate you. You can't have the sitting president hate you or think that you're the enemy, because if you are the enemy, he has the power to potentially make your life very difficult. And you got that sense from him. I just wonder what levers they're pulling and just how committed the potential presidential candidates are to creating this wall between U.S. and China tech.
This conversation, a small part of the rally we're seeing in the likes of the chip makers worldwide this morning. Coming up in the third hour of Bloomberg Surveillance, we'll catch up with Liz Young-Thomas of SoFi, James Lee of Mizuho, and former St. Louis Fed President Jim Bullard, looking ahead to a Fed decision from New York City. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I can understand why the Fed has been so cautious after the whole transitory fiasco, but I think I'm getting close to the point where I think they're too late now.
They'll keep on saying 2% is our target. We'll get there when we get there.
Really? You're going to wait till something goes wrong before you start cutting rates? Isn't that too late?
It's time now to move to a less restrictive policy stance.
I think rate cuts are definitely coming. I just think that at this point, there's not a really strong case for waiting.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
That was a chorus of calls to cut interest rates right now, today, at the Federal Reserve. And that's exactly what you won't get a little bit later, according to most economists on Wall Street. From New York City, welcome to the program. The third hour of Bloomberg Surveillance starts right now. A flavor of the price action, a rally, a pickup, a bounce, if you will. On the S&P 500, the NASDAQ, the Russell. On the NASDAQ 100, higher by 1.6%. We'll talk a lot about the tech earnings through this morning, but I want to start with the day ahead. Your day ahead looks like this. So in about 15 minutes' time, we get the ADP jobs report, before claims tomorrow and payrolls after that. And then later on this afternoon, a Fed decision. 30 minutes later, a news conference with Chairman Powell. And if that wasn't enough, more earnings for you. After the close, Lisa, Meta just around the corner.
We should really sit on the Fed for a minute, because we've kind of put that on the back burner because there's been so much else going on. And frankly, because people are sick of talking about just the baby step that they're about to take. How do you parse through a slowdown that isn't necessarily leading to some sort of recessionary environment? I will just put this in for perspective. We now fully have a rate cut priced in for September. We now have 2 rate cuts fully priced in by the year of the end, more than that actually. And then it goes to pretty much rate cuts at almost every meeting or every month. This is a market that is expecting both a very accommodative Fed over the next year, 2 years, at the same time that growth is expected to hold up. Square that circle.
There's one quote that stuck with me all week, and it came from Andrew Hollenhorst of Citi. He said the labour market's on the edge of uncomfortable. And it's the Federal Reserve's evolving characterization of the risks evolving in the labour market that I think is front and centre going into this news conference. We've got a jobs report on Friday, and we joked with Michael McKee earlier this week that if we could have the sequence switched around, it would probably be better. If we could have payrolls today and a Federal Reserve decision on Friday, that would be a lot more helpful. We need to understand, are we seeing real cracks in this labour market? Are we seeing reasons to have real concern? Or do we agree with the Bank of America, Michael Gapins of this world, that things are cooling, but they're not cool?
You know, this just added to the uncertainty around the JOLTS report that we got yesterday and consumer confidence. On the face of it, they came in better than expected, at least the headline. Again, I thought, oh, wow, this sort of goes against this weakening trend. Pretty much everyone who wrote a note about these 2 reports said that it highlights the weakness in the labor market. People are concerned about not being able to get jobs. You could see that in the surveys. You could see that measures of job openings relative to the population, relative to unemployed, coming down to pre-pandemic levels. And the pace of it was what got a lot of people's attention. This is not just one point on a linear trajectory. That's not how this works.
There's 2 things that jump out. Hiring. A company's hiring at the same rate. The chart looks like this. The other one, do people have the confidence to quit their jobs and find a new one? The quits rate, the chart looks like this. Now, some people might say that's just the process of normalization coming out of the pandemic. Other people might point out that things are going to be a whole lot worse than that. You point to the speed, the pace at which this is happening, and this is exactly what Torsten Slock of Apollo has been talking about as well. If the economy starts slowing down, the speed of the slowdown becomes essential. A faster slowdown would have negative implications for earnings and increase the probability of a sell-off in stock markets and credit markets. It's pace and the why. And the why is the other thing we have to explore this hour as well. If they're reducing interest rates in September, is it just because of the disinflation? Or are we starting to see bigger cracks emerge in the labour market? Where are we in about 2 months' time? And that dictates whether these are rate cuts that are good for risk assets or rate cuts that are against a backdrop that is bad for risk assets.
Exactly what you laid out was the reason why Emily Rowland is frustrated beyond all belief and seems to have had a very frustrating July, having been underweight small cap stocks, because all of this doesn't scream go into cyclical names that are going to be most leveraged to an economy that's slowing down. This screams that the balance of risks really is that you're going to see companies have to lay people off and then deal with consumer spending that's coming down more significantly. Doesn't scream more leveraged companies to me. At the same time, that's what we've seen in markets that are priced to that soft landing. And that, I think, is what we need to explore, is just ultimately, has the market overpriced the soft landing narrative or underpriced the resilience of an economy that keeps chugging along?
It's not just present company. It's super easy right now to get somewhat bearish, right? You listen to the companies. It's not just about Lisa. You listen to the corporate communication, the guidance you're getting. If they're telling you that essentially sales are slowing, if they're telling you that they're losing pricing power, a corporation needs to protect its margins. So what's the next lever to pull? It's costs, it's labor, potentially, and that's what I think we're all looking for in the months to come. And we hope it doesn't happen, but based on what they're telling us at the moment, you can certainly see things moving in that direction.
yesterday, and this isn't really related to necessarily cost reductions, but Intel laying off thousands of people in part to redirect some of its strategy. You're seeing consumer discretionary spending really pull back and companies saying we're looking for cost-cutting measures. At a certain point, how many idiosyncratic stories does it take to make up a light bulb, right? I mean, how many times do we have to hear this before suddenly that does change the narrative?
Futures, though, this morning, pretty decent. Everything's okay. Okay, we'll get you the bullish view as well. This sounds so bearish this morning, starting this hour. Forgive us. Equity futures right now on the S&P are positive. We're up by 1% on the S&P 500. In the bond market, we rally for a fifth consecutive down. A 10-year Treasury yields are lower again by almost a basis point, 413.16 on a US 10-year. Coming up this hour, we'll catch up with Liz Young-Thomas of SoFi as stocks look to stage a relief rally. James Lee of Mizuho on why Meta is well positioned for AI growth, and former St. Louis Fed President Jim Bullard as the FOMC is set to hold rates steady this afternoon. We begin with our top story, stocks rebounding ahead of the Fed decision later on. Markets expecting officials to hold rates steady but set up a dovish pivot. Liz Young-Thomas of SoFi saying this: there's still room for stocks to rally as rate cuts begin. More cuts will be priced in before year end. Cuts are not a bullish economic signal. Small caps will lose steam as data cools. Liz joins us for more. Liz, I want to pick up on that last piece of the quote. I think it's so important. The limits of getting bullish on rate cuts alone, how big, how prominent, how strong are those limits?
Well, I think the market is still in a place where we're viewing rate cuts as a bullish signal, at least for equity assets. And that's been sort of the reaction, although we've stalled out in some of the usual suspects that have driven rallies over the last few months. But looking at what's happening in small caps, you're obviously seeing this enthusiasm and that rotation out of large cap tech, which was feeling stretched and overcrowded, into small cap, which is, I think, investors sending the signal that we're not worried. We don't want to take money out of equities, but we are looking for places that are more attractively valued. And if rates are coming down, perhaps small caps are more attractively valued. I would agree with that. But it was a point, I think Lisa made this point earlier, that if we are plowing money into small cap stocks, the idea would be that we're in some sort of broad economic expansion. But we know that economic growth is slowing, the labor market is cooling, inflation is coming down, which has all the markings of late cycle behavior. That's not usually when small cap stocks start to rally and stay rallying. So I would be careful here putting too many eggs in that small cap basket.
At the same time, you do expect stocks to rally. So it raises this issue of, okay, are we essentially looking right now at the idea of tech reclaiming its dominance as it had over the past couple of years until a couple of weeks ago to continue powering a market that otherwise, underneath the hood, continues with some of the weakest parts continuing to weaken? In other words, a reversal back to what we saw earlier this year.
So I want to be careful with the word rally. I don't necessarily see this huge and strong rally between here and year end. I think in the near term, as we have optimism about the Fed not hiking rates anymore, and as we have optimism about inflation continuing to come down without the labor market falling apart, I do think that there's still room for that rotation to continue. So some of the sectors that have caught a bid that normally would catch a bid early in a rate cutting cycle, things like financials and real estate, I think there's still some room there. I do still think that there's enough optimism in small cap stocks for that to continue as well. But as we're seeing play out in real time, as these big cap tech earnings come in and investors have gotten much more critical about how they're spending their money, what's happening with AI, where is the profit coming from, and when is the profit coming, you'll see those stocks experience some pain. And I think that has more legs to continue as well.
We've been talking all morning about how incredibly busy it is and how difficult it is to focus on which is the major driver on a day like today, where we have been talking about the Fed, but that seems to have taken a back seat. We're also talking about tech earnings, tech possible policy. We're talking about the election, and we're talking about the Bank of Japan. What do you think is sort of the main event that you're clinging to on a day like today?
Well, I can tell you the Fed never takes a back seat for me. I concentrate on that quite often. And today is one of those days that I don't think we're going to get necessarily any surprise announcement from them. I don't think they're going to move rates despite some of the chatter last week. But I do think that we're going to see a shift in commentary to a more dovish stance, or at least something that puts more concretely on the table the idea of a cut in September. And then I think the really important thing to watch between today's meeting and September's meeting, which is September 18th. So we've got about 45 days in that time frame. We've got 2 more CPI reports. We've got obviously jobs data on Friday. We'll have more jobs data in September. I think the labor market is the key here. And if things cool more than expected, both in CPI, but more importantly, in the labor market, I think we start to hear things heat up about a 50 basis point cut in September. And that will be the most important thing to watch, because I think the market might have trouble digesting that. Is 50 basis points a signal that we're in trouble, or is 50 basis points a signal that things are going better than expected?
Liz, got to get into that a little deeper. Where do you think we will be in September? Will that be a rate cut that's framed by increased confidence around inflation, or an increased discomfort with what's happening in the labor market?
I think it has to be both. They have a dual mandate, and we've been so obsessively focused on inflation for such a long time that now that's starting to take a little bit more of a back seat as it's come down so sharply. Now, it's not taken care of. It's certainly not at target, but the Fed has commented that they're willing to start cutting rates before it's at target. They're not moving their target, but they're willing to start cutting before inflation gets to target. So I think that stops being the only decision factor. I think the labor market becomes a much larger decision factor. And where we are right now in the labor market is almost perfectly balanced. We've got the amount of jobs open to the number of unemployed people at the same ratio as it was before the pandemic. We've got more balance in employment costs. We've got an unemployment rate that's rising, but it's not uncomfortable. The trick is we sort of want it to stay exactly right here, and the chances of that happening are low. So I think that labor will cool further, and a rate cut in September will be in response to inflation having come down already and the fact that the labor market is cooling.
On the prospect of a 50 basis point cut in September, Liz Young-Thomas of SoFi, base case seems to be 25, but Lisa could see where that conversation's going. Liz Young-Thomas was great there. Liz points out that the consumer is boss, and the boss is starting to push back. And we've seen that in a lot of company earnings over the last few weeks.
This is fascinating to me because we heard the same thing from James Camp of Eagle Asset Management a couple of days ago. He doesn't see the economy rolling over, and it didn't sound like Liz did either. But the idea that maybe this Fed, if it doesn't cut today, opens the door to potentially a bigger adjustment in September if the economic data shows it. In other words, is basically the band going to be, we're going to cut for 25 basis points. The question is just, could we go a half a percentage point?
I know July feels like a lifetime, but 2 months, September, that's like ages away, isn't it?
It's basically science fiction.
I know. Okay. If you are just joining us, welcome to the program. Big day ahead. Get used to seeing us. You'll see us again this afternoon with a Federal Reserve decision just around the corner. Special coverage begins at 1:30 Eastern Time. The decision at 2 o'clock. 30 minutes after that, Chairman Powell news conference. We'll take that in its entirety. Got a fantastic lineup of guests for you. I'll give you a sneak peek of that a little bit later on this hour. Equity futures on the S&P 500, firmer by 1% on the S&P this morning, with an update on stories elsewhere with your Bloomberg brief. Let's get across to Danny Berger. Hey, Danny.
Hey, John. Shares of Marriott down 4.2% in the pre-market trade. Second quarter earnings came in just above estimates, but it did cut its full-year earnings guidance. Marriott said that it was lowered expectations primarily because of weakness in China, alongside softer expectations in North America. Marriott is boosting its room count in a bid to drive revenue. It added around 15,000 rooms in the past quarter. And a new Bloomberg Morning Consult poll suggests Kamala Harris has wiped out Donald Trump's lead across 7 U.S. battleground states, the vice president riding a wave of enthusiasm among young Black and Hispanic voters. The poll found 48% support for Harris and 47% for Trump. That does reverse a 2-point deficit for Joe Biden before he withdrew from the race. However, the result is within the poll's margin of error, meaning the election is still a toss-up. Nouriel Roubini is looking to become the latest high-profile Wall Street veteran to launch an ETF. A filing with the SEC suggests the fund would be called Atlas America. It would invest in U.S. debt, real estate, equities, and gold, actively managed by Roubini and 2 others. Its aim, generate low-vol, stable returns with limited correlation to the broader equity market, which would theoretically allow for downside protection. And that's your brief, John.
Danny, thank you. Appreciate it. Camera shouldn't be on me. Camera should be there.
No.
Lisa's like, take all my money.
No.
Take all my money.
Black Swan ETF. Can you imagine what
Love
kind of
that, wouldn't
downside protection? No, I just, I'm going to want to see what he buys.
I'm going to message Nouriel. We've got to catch up with Rabini on that story next week or something. Up next on the programme, we'll get you some morning calls, plus James Lee of Mizuho previewing Meta earnings. That conversation just around the corner. You're watching Bloomberg TV.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Just got the ADP report just moments ago. With that number, let's cross over to Mike McKee. Good morning, Mike.
Good morning, and we've got a kind of a weak labor indicator, the kind that you were talking about just a short time ago, as ADP reports just 122,000 jobs created in June, at least according to their methodology, in July, rather, according to their methodology. They say most of the jobs were in the construction area, along with some in retail, but very disappointing service industry numbers there, only 85,000 in service industry jobs. Pay rose 4.8% for those who are in the same jobs. That's the lowest level in 3 years. So to the extent that ADP is seen as any kind of indicator, it is going to push down on people's estimates for what we're going to get on Friday, and it gives the Fed something to think about.
Mike McKee, thank you, sir. I know we're going to touch base with you in about 12 minutes, so we'll catch up again in just a moment. 122 on ADP. The estimate in our survey, 150. Looking ahead to Friday. For the payrolls report, a sneak peek, a preview, if you will, an estimate from our survey. The median estimate, 175 for Friday payrolls. The previous number, 206. Let's get to some of the price action and start with equity futures. On the S&P 500, on the Nasdaq, on the Russell, there is a lift here across the board. On the S&P, up by something like 1%. The Nasdaq 100 now higher by almost 2 full percentage points, up by 1.8%. That's the equity market. Let's get you some morning calls. First up, TD Cowen downgrading McDonald's to hold with a 280 price target. The analyst noting disappointing earnings and weaker second half guidance. We're down there by 0.5%. Your second call from Evercore, maintaining its outperform rating and $500 price target on Microsoft. The analyst highlighting the durability of Microsoft's business model and growth catalysts like AI on the horizon. That stock is still down by 2.2%. And finally, Morgan Stanley renaming NVIDIA as its top pick in the semi space. Analysts pointing to an attractive valuation and entry point ahead of its earnings report next month. That stock is higher in early trading by more than 7%. going into the opening bell. Looking ahead to Meta earnings this afternoon, James Lee of Mizuho sticking with an outperform rating and 575 price target, saying the tech giant is well positioned for AI growth thanks to its app-integrated, user-driven approach. James joins us now for more. James, thanks for touching base with us here at Bloomberg. You said the setup into the print was good. Can you build that out? What do you like about the setup into earnings later?
Great, thanks for having me. Based on ad agency checks, the quarter is actually tracking but modestly ahead of expectation, and consensus for 3Q is actually reasonable compared to historical trends. In addition, we see drivers to support the second half of this year, including political advertising, the Olympics, improved monetization of Reels, and the Amazon integration into Facebook Shops. So we think the bigger debate into the quarter is actually CapEx, which could actually increase for this year. The company is currently guiding for 33% growth at the midpoint. We think it could go as high as 50% due to AI investments. However, we believe the company has enough financial flexibility to manage that margin dilution risk by lowering its OPEX growth. Keep in mind, the company guided about 14% increase in OPEX, and most of that's headcount, so they have a lot of flexibility in terms of managing that process. So we like the stock into the quarter.
James, just to build on the CapEx story, if they ramp that up, how forgiving do you think investors are going to be based on the experience of Alphabet over the last week or so?
Yeah, a good question. It's a function of how much they can lower OPEX in terms of manage that margin. Of course, when you increase CapEx, you're also increasing depreciation, which puts your margins at risk. And since the company has a lot of flexibility, keep in mind the OPEX really high at 14%. And our understanding is that most of that OPEX growth is really coming from headcount. So they have a lot of flexibility to bring it down. So our scenario analysis is interesting, shows that even if the CapEx goes up by 50%, all they have to do is bring the OPEX down by 1 point to neutralize that margin risk. So from that perspective, we feel very comfortable into the quarter.
It wasn't that long ago that Meta was penalized heavily for spending on the metaverse and on all sorts of projects that a lot of people thought weren't necessarily profitable. And the way that they led their shares to rally so much was to pare back. What we saw with Google was that they were penalized for basically going back to their bread and butter, for really being an advertising and search company. Will Meta face the same kind of penalty for really being an advertising company and not necessarily looking to that next driver of growth?
Yeah, fair point. I think part of the reason that investors did not really like Google's quarter, besides the CapEx issue a little bit, the secondary issue was a weakness in YouTube, because coming into the quarter, I think tracking for YouTube was pretty strong. And the company did not provide a lot of reasons on the weakness of YouTube, other than top comp from Asian-based advertisers. And from Facebook's perspective, from Meta's perspective, we feel pretty comfortable with the advertising tracking into the quarter number one. And when we think about AI investments, we see three distinct opportunities that should have meaningful upside to the company. One will be WhatsApp. If you think about WhatsApp right now, it's making about $2 revenue per user. If you look at internationally for Meta user, it's $20. If WhatsApp can get to international level of revenue per user, they could increase their revenue base by 30%. It's all AI driven. And number two, they could unlock additional ad spending by automating some of the creative process of advertising. Now, when we talk to agencies in general, video production is about 30% of the total advertising costs. Now, using Gen AI and prompt engineering, they could automate the entire process, saving a lot of money for advertisers, which can unlock additional spending onto the platform. So these are the two major areas where AI can unlock significant amount of revenues for Meta.
I don't think I'm prepared for this next era. When we see someone on TV or we see someone on an advertisement, we're not sure whether they're actually real. James, just want to finish up. You mentioned China, and that is a significant part of revenue just in terms of buying advertising. How much do you expect that to come to the fore at a time of increasing tensions?
Yeah, that's right. That's right. What the company has said for Meta specifically is they are expecting a tougher comp from Chinese-based advertisers. What they have said is about 6% of the revenue from last year was from Chinese-based advertisers. And from that perspective, they do believe, number one, comp's going to be a little bit tough. Number two, they do expect that there's going to be a shifting of advertising or Chinese-based advertisers away from the U.S., and that's already contemplated into the guidance for 2Q. And it seems like it's already baked in for consensus for 3Q.
Hey, James, we've got to leave it there. Appreciate the update. James Lee there of Mizuho. The stock is positive by about 0.5% in early trading. In the pre-market, up by 0.7%. Question around China always amuses me when it comes to Facebook. The business is not in China, but they rely a lot on Chinese business. Does that make sense?
Yeah, the Chinese companies and entities buy a lot of advertising, so they're a huge driver of revenue. And frankly, they can still sell goods in the United States. And from everything we've been hearing, in particular from Peter Scheer, they want to do more of that. So that's a huge source of revenue. How do they deal with that ambassadorship?
It's a challenge. Let's put it that way. Coming up next on the program, we'll break this down for you. We will get the Treasury refunding details. Mike McKee's going to bring that to you in just a moment. As we look ahead to the Federal Reserve decision later on this afternoon, we'll catch up with this man right here. Looking forward to this, the former St. Louis Fed President, Jim Bullard, just around the corner. From New York City, futures are positive from New York. This is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From business's most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Hello, dollar yen, a break below 150 for the first time since March. We're down to about 149.93 after the central bank hiked interest rates a little bit earlier, gave us a strong signal that was more to come, and gave you some guidance on halving the bond buying out of Japan over the next year or so into 2026. This came from Wells Fargo. They say the drawdown in dollar yen is likely mostly done for now, barring a weak jobs report, particularly one that shows the unemployment rate back to 4.2%. Or with headline payroll gains well below 100K, we expect dollar yen will find its footing around or just below 150. That's the latest on the FX market. I want to turn to the bond market and just go through where yields are currently and then get some headlines for you in just a moment. Yields are down by 2 basis points on a 10-year. We're back to about 412. At the front end of the curve on a 2-year, we're down 2 basis points to 433.78. About 15 minutes ago, we had a weaker than expected ADP report with some details on the Treasury market and a little bit more detail around the labour market as well. Let's get across to Mike McKee for more. Hey, Mike.
Good morning, John and Elisa. Very quickly, the employment cost index, the Fed's favorite measure of prices for labor, comes in a little bit weaker than anticipated at 0.9% gain for the second quarter. That is less than the 1% anticipated and 1.2% in the first quarter. Wages and salaries up 4.2% over the past 12-month period. And for civilian workers, private industry workers, 4.1%. So a definite easing in compensation costs, something else the Fed's looking for. Now, let's take a look at those refunding numbers and a little bit of the controversy around the use of Treasury bills. $125 billion is going to be offered to refund about $111 billion in maturing notes and raising only $14 billion in new cash. Treasury says it will modestly increase bill auction sizes next week, then cut back in September when corporate taxes are paid. They will start to increase them again in October. Treasury does not anticipate increasing coupon auction sizes over the next few quarters, which is what they've been saying for the past couple of quarters as well. 3-year note, $58 billion, 10-year note, $42 billion. The 30-year bond, $25 billion. That's over the next couple of weeks. This will be the first auctions for those notes, those brand new notes next week. Then the Treasury Borrowing Advisory Committee note is out and kind of addresses this whole controversy over whether Janet Yellen and Treasury is manipulating bond prices, bond yields, in order to keep interest rates down for electoral reasons. Nouriel Roubini, we're talking about him, one of the people raising those charges. They say they have supported bill issuance above 20% for the past 5 quarters. And if you're considering the 15 to 20% amount of Treasury bills as a percent of the total auction numbers, that the 15% minimum is more important than the 20% upper bound, although over time 20% is reasonable. And the Treasury Borrowing Advisory Committee, which is the fixed income people from all over Wall Street, says Treasury does need flexibility. They don't mention the controversy itself, but it does look like they are supporting what the Treasury finance people are doing.
Mike, it seems like the Treasury Department is trying to make this a non-story, and they're doing a very good job of trying to make the Treasury auctions on sort of the back burner of the broader news flow to not necessarily disrupt whatever else is on the agenda, which is the reason why employment cost index really caught my attention. The fact that it came in below the expectation and significantly below 0.3%, below where it was the prior reading, raises some questions about the consistency of which we've seen all labor market metrics showing deterioration. Mike, can you talk about that kind of trend and whether you expect that to kind of color the conversation more directly later today?
Well, it will color the conversation, and you can bet that all of the Fed Bank presidents and governors will be reporting that what they've seen is a slowing labor market in line with the fall in inflation, and that moves them closer, we hope, to confidence in rate cuts. But the problem here is employment cost index is once a quarter, and the ADP is not necessarily as reliable as the non-farm payrolls numbers. So it's probably not enough for them to hang a rate cut on right now, but it will tell them they are going in the right direction. And it would be hard to say you don't have a lot of increased confidence in the idea of inflation coming down and the ability to cut rates ahead. So I think we probably get a strong hint that that's coming.
Michael McKee, we've got Jim Bullard in just a second. Any questions for Jim? I can throw him into the conversation in just a moment.
Well, I think the biggest question for the Fed is, are they behind the curve now? You were just talking a little bit ago about the idea that the Fed may be letting unemployment get away from itself. And that's going to be a question that the Fed is going to have to be asking. Is unemployment going to fall apart quickly? And the numbers today don't say fall apart, but they do say that we're seeing a significant slowdown.
Looking forward to your coverage, sir, a little bit later, 2 p.m. Eastern Time. Mike McKee breaking down the Fed decision from Washington, D.C., inside the Federal Reserve building. 30 minutes after that, Mike's going to be in that news conference with Chairman Powell, and we'll take those questions and those answers in its entirety right here on Bloomberg Television. Just want to reset and give you a flavour of the price action going into the opening bell in less than 1 hour from now. Equity futures pushing higher on the S&P 500 by more than 1%, 2% higher on the NASDAQ 100. In the bond market, the rally continues for a 5th consecutive session on a 10-year, the longest winning streak since early June. Yields are lower by 3 basis points this morning, down to 4.11, levels we haven't seen since early March. If you switch up the board and finish on dollar yen breaking below 150 for the first time since March, very briefly. Just above that level right now, 150.07. That currency pair is negative 1.8%. We've had the guidance from the BOJ. We've had the rate hike from the BOJ. You should expect more. And the bar for more, based on what we heard from Governor Ueda, Lisa, the bar for more is quite low.
It doesn't seem like it's necessarily hinged to a dramatic economic acceleration, because that's not what you've seen. Instead, this is the reason why people are talking about the idea of yen support as the main driver. I will just say, we need to put into perspective. They had negative rates for a long time. We're talking about 0.25% being the highest since 2008. 0.25%. We're talking about 5.25 to 5.5% in the United States. This is a completely different regime that is suddenly realizing that the weaker yen is actually hurting confidence and hurting some of the cost of living issues a lot of people are facing.
The bulk of that move on dollar yen right now, the bulk of it, is off the Bank of Japan story. Just that little last leg in the last 10 minutes or so, last 20 minutes off the back of the labour market data in America, just a little bit softer than expected. I said Michael McKee would be in the room a little bit later. Let's talk to a man who's been in the actual room making the decision many times before over the years. Joining us now is Jim Bullard, the Dean of the Mitchell E. Daniels Jr. School of Business at Purdue University and the former St. Louis Fed President. Jim, it's wonderful to catch up with you, sir. Once again, a timely conversation. You have lived this repeatedly, and you've experienced the calls coming from outside the building, beyond the FOMC, to do something. And we've heard plenty of those calls. You've seen them too, from the likes of Alan Blinder, from the likes of Bill Dudley, from Mohamed Al-Arian, saying this Federal Reserve needs to get a move on. I want to pick up on the last one, Mohamed Al-Arian. The point that he's made is a similar one that you've made, Jim, is that this Federal Reserve seems to have become more data point dependent and not data dependent. Can you just explain the distinction and the importance between the two?
Yeah, I think if you say you're waiting to the next meeting because you want to see some data between now and the next meeting, that makes markets wonder, okay, well, what is it that could derail a rate cut between now and the next meeting? If you do react to that data, then that's kind of data point dependence. And I think that's what Mohamed Al-Arian has been talking about. One thing that I did often say when I was on the committee was that, if you know you're going to do something with 100% probability at the next meeting, why aren't you doing it at this meeting? And I think that often gets the committee into a little bit of hot water because sometimes the data don't cooperate between this meeting and the next meeting. So it can be managed, but it's kind of a committee dynamic that's been on and off over the last decade or more.
This is the reason why many people, including Mohamed Al-Arian, say the Fed probably is not going to cut rates today by 25 basis points, even if there is a consensus that they're going to in September, because they haven't telegraphed it and it would disrupt markets, saying what do they now think that they didn't think at the last meeting. However, Liz Young, we were also talking to James Camp of Eagle Asset Management. They're suggesting the Fed could set up a 50 basis point rate cut in September. Are you sympathetic with that?
No, I think that's too much. What I do think could happen is that they'll get going in September, but the discussion will turn to what about November, what about December, what will the pace be? Chair Powell said that this first rate cut is consequential because it starts a process. what is that process? And if the data continue to confirm disinflationary trends, I think you could bring November onto the table, and then you could have a sequence of rate cuts into the first part of next year, and then the committee could assess at that point where they are and how they want to play it from that point.
Do you feel like they've backed themselves into a corner in some ways by being so data dependent, by just repeating that sort of de facto to every question?
I don't know. This is a pretty successful policy here. Output growing, between 2 and 2.5% on a run rate. That's very close to the potential growth rate for the U.S. economy. Unemployment coming up ever so slightly as they predicted. Inflation coming down as they predicted. There's a lot to like about this. And the last piece of the soft landing would be to get the short end of the curve down and get rid of the inversion of the yield curve. So to do that in an organized way without signaling that you're worried about the economy, because I don't think they are worried about the economy right now, is really the trick here.
Jim, do you think they should be worried about the economy right now?
I think it's still, to me, it looks like an economy that's in a soft landing. It's growing at a trend pace, pretty good. Of course, there's always risks out there. There's always the possibility that some big shock would occur, or one of the geopolitical events would sort of roll back onto the global macroeconomy. But just sitting here with this data, this looks awfully good. And so if they can get the last piece of the puzzle in place, I think they'll be in great shape.
I said earlier this morning that the Federal Reserve is not in the crystal ball business, it's in the risk management business. And Jim, you know that better than most. And I just wonder, when you think about the balance of risk right now, if the risk for higher unemployment is greater than the risk for higher inflation, do they need to formalize that somehow in the statement that comes out a little bit later on this afternoon?
Yeah, I would say they probably think it's more balanced than it was. You had this overheated labor market, which is now much closer to the pre-pandemic labor market, but that labor market was considered pretty strong. And now you've got inflation not being nearly still elevated, moderately elevated, but not nearly the concern that it would have been a year ago, or 15 or 16 months ago, when it was up closer to 5% on the preferred measures of the committee. So I think things are relatively balanced. Now they can begin to lower the policy rate. There is a risk, though, that when output's growing a trend and unemployment's at the right level and everything's going good, well, the policy rate should be at its neutral level as well. And that's the part of the soft landing that isn't there. So the comments by Alan Blinder and Mohamed El-Arian and Bill Dudley are reflecting that, I think, is that they couldn't find a moment earlier this year to get started on this downward descent. And they're hoping that September will be that moment.
The problem with going back to neutral is that there is a huge debate raging in markets, and I'm sure at the Fed as well, on what neutral looks like, on whether we truly are in a higher inflation type of regime, or whether we're going back to something familiar to pre-pandemic. It seems like about 6 months ago, everyone was saying we're in a new higher inflation regime, and increasingly it just seems like there's some doubt entering in that maybe we're reverting back to what we knew, say, 5-6 years ago. Where are you in this?
On that, I would say that the committee should guard against inflation dipping below the inflation target, because I think if that happens, then you will get this discussion about, okay, we're going back to the regime that was in place between 2009 and 2019, exceptionally low inflation, exceptionally low nominal interest rates, even negative nominal interest rates in many parts of the world. They'd be worried about that. So I don't think you want to do that. You want to approach the inflation target asymptotically from above. We're at about 2.5% inflation right now, PCE. You'd like that to gently come down to 2%. Even when they lower the policy rate, it'll still be a restrictive policy. They'll still be putting downward pressure on inflation, but you don't want to put too much pressure on now because you want a glide path into the 2% target.
Based on what you just said, you earlier said that the balance of risks is basically pretty equally balanced, measured at a time where inflation's coming down but still present and employment still looks like it's fairly strong. Based on the fact that you think that there is a greater risk of inflation undershooting than overshooting, that is the bigger risk that the Fed needs to counter, what would be the argument for them not to say that the balance of risks...
So far, it's a risk that hasn't even been talked about, but now it's time to start thinking about that as you try to get this last leg of the soft landing in place, and so when you're coming off 5% core PC inflation, you're kind of it's traumatizing for a central banker. So right now they've just been focused on let's make sure inflation's not going back up, and that was the story certainly in the first quarter of this year. But now that you've got better inflation reports, now you have to think about, well, how do we play the end game here, declare victory, get into the soft landing, and then see what's around the corner.
So why wouldn't they just put an emphasis on the employment market and say that there are clear signs that it's softening, there are clear signs that it's normalizing, and we aren't sure where it's heading? Right now, we're going to focus more on that than inflation.
I think they've been gently saying that. But really, the labor market has been normalizing from a very hot market. You had 2 job openings for every unemployed worker, just astoundingly high. Now you still have 1.2 openings per unemployed worker or so. That's the pre-pandemic number. That was also a good labor market. So it's not that the labor market is deteriorating in a way that causes alarm or would cause the committee to move. But you have to ask if, and Austin Goolsbee of the Chicago Fed has asked, if you thought 5 3/8 was the right policy rate last summer when inflation was much higher, why do you think 5 3/8 is the same? Is also the right policy rate today with a little bit higher unemployment and much lower inflation. So you do have to react to the data in the big picture, and I think that's the committee's looking for the right way to do that and the right moment to do that. And it looks like September is going to be that moment.
Hey, Jim, boiler up. Am I doing it right? I think I'm doing it right. Former St. Louis Fed President Jim Bullard, out of Purdue now. Appreciate it, sir. Thank you very much. I want to go to the statement just briefly, the last statement we got from the Federal Reserve. The first paragraph is essentially where they think the economy is right now, the strength of the labor market, what inflation has been doing. And it's on the labor market when they say this: job gains have remained strong and the unemployment rate has remained low. Then they kind of just sort of move on from that. And then the second paragraph, you get the assessment of the balance of risks around some of their outlook for the economy, for the labor market, for inflation. The committee judges that the risk to achieving its employment and inflation goals have moved towards better balance over the past year. The outlook is uncertain and the committee remains highly attentive to inflation risks. I just wonder how highly attentive they need to be to the breakdown in the labor market, and whether actually if we get some tweaks today, we see a little bit more of that, a little bit of a shift in that direction even more.
And that's how much this market will be attuned to every change in word, because if they change that and they focus on being highly attuned to any kind of further deterioration in the labor market, that could be enough to fuel a massive rally in bonds as people anticipate deeper cuts and sooner cuts later on this year.
I like Jim's question, though, to the committee, and it speaks to what Mohamed El-Erian is worried about, that they could be one data point away from being spooked and not doing anything in September. If you want to move in September, why don't you just go at this meeting? That's basically what the Jims of this world have been asking on this committee, but this is just the way the Fed works, I guess.
Well, how do you justify it if you believe in forward guidance and you haven't delivered that forwarded guidance ahead of time? That's kind of the sticking point here.
A Fed decision, 2 p.m. Eastern Time, news conference 30 minutes after that. With an update on news elsewhere, let's get to your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Delta says it expects a $500 million impact after it had to cancel thousands of flights following an errant software update from CrowdStrike. Delta revealed the figure in a statement to Bloomberg after the CEO, Ed Bastian, told CNBC it would seek damages from the disruption. The $500 million figure is in line with Wall Street expectations. Delta is currently under investigation from U.S. transportation authorities over its handling of the tech glitch. Boeing shares rising in the pre-market, up more than 1%. It announced industry veteran Kelly Ortberg as its new president and CEO. He'll replace Dave Calhoun, who announced that he's stepping down at the end of the year. Ortberg ran one of Boeing's biggest suppliers, Rockwell Collins, until 2018 when it merged with RTX. He then acted as an advisor to the RTX CEO before retiring in 2021. Boeing also reported its earnings this morning, saying revenue in the second quarter fell short of estimates. And it is day 5 of the Olympics kicking off today. 18 medal events taking place. That includes artistic gymnastics, diving, and swimming. Athletes have already taken to the Riverside this morning for the men's and women's triathlon. Officials did declare that the water quality was safe. France picked up gold in the women's race, and Great Britain, Alex Yee, overtaking New England's Hayden Wild on the final turn for gold in the men's race. The U.S. is leading the overall medal count with 27. 4 of them are gold. Meanwhile, China has 8 gold medals and 16 overall. And that's your brief, John.
Danny, thank you. Thanks for this morning. Yesterday afternoon, emotional watching the gymnastics, wasn't it?
Yeah, well, I mean, I know that you're biased because U.S. came first, then came Italy.
It's quite a lineup. Everything was going in our favour.
I mean, I've got to say, it was emotional, though, that team, that gold team from
Some
the
of the
United
stories,
States.
there was an athlete for the Brazilian gymnastics team, grew up in the favelas, dirt poor, one of 8 children, and the brothers would walk her 2 hours to get to the gym. You know, you hear all these stories come out of the Olympics, the dedication, the sacrifice that these families make to have this moment every 4 years. It's pretty phenomenal.
And very few of them are coming from very privileged backgrounds where they were able to train just with endless resources. There are a lot of people who grew up like that. It brings tears.
Congratulations to Team USA. And what are we calling this? The Redemption Tour. It's just phenomenal, phenomenal. Up next, we'll set you up for the rest of the week and a busy day ahead. From New York, this is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening about 37 minutes away with a big lift in this equity market on the S&P 500, up by 1.3%, up by 2% on the Nasdaq. We'll talk about big tech in just a moment. Your day ahead looks like this: 2 p.m. Fed decision time, followed by a Chairman Powell news conference 30 minutes later at 2:30 Eastern. Thursday, another round of jobless claims, and it's the Bank of England's turn. And then on Friday, the big one, the payrolls report. As for the earnings, a little bit later on, after the closing bell, Meta ahead of Apple and Amazon a little bit later this week tomorrow. Joining us around this table, I'm pleased to say, is Bloomberg's Ed Ludlow. Ed dropping by from the West Coast to the East Coast. Ed, you've been a busy man already. What should we look for from Meta later on this afternoon? afternoon?
Yeah, based on what's happened so far, don't miss estimates. That's probably a good start. And they're going to be laser focused on capital expenditures, right? Mark Zuckerberg's talked a lot about it. I don't know how you guys feel about Meta in relation to the other mega caps. Like, a lot of investors I speak to think it's a very different beast. Even if you go on fundamentals, it trades at like sub 21 times forward earnings, Microsoft at 31 times. It's a social media platform, and that might be a saving grace, irrespective of like how much you're spending on AI, how much you're making on AI.
Well, that was exactly where I was going to go. Do you think that the bar is lower for Meta to show some incredible headwind in AI in order to keep gaining investors' confidence?
Maybe. Earnings with Meta are always one where somebody misses something. So last quarter, when they upgraded the CapEx guidance, I went straight to NVIDIA after I was trading on my terminal. I was like, oh, NVIDIA's jumping, shock, because that's where all that CapEx goes. And investors demanded that Meta do that and then punished them because they weren't happy with the narrative of how AI translates to their existing stuff. WhatsApp, Facebook, Instagram. Maybe we'll hear a bit more about that. You know, they are an interesting company. They're making large language models. It costs a lot of money. They are open source advocates. That puts them as sort of a leadership position in that field. They still run social media platforms dependent on advertising.
Just quickly, are we happy with Microsoft? What do we think of that? Let's park the initial price action. Are we happy with the guidance we've had from Microsoft?
Yeah, don't miss estimates. And again, like CapEx, big jump, and they didn't see the money coming out the other side. But I don't know if you guys saw in the earnings transcript, it was pretty clear. Twice, Amy Hood, the CFO, said it's going to take 15 years for us to start making money on these capital expenditures, monetization. And that seemed like a big clue of how long this is going to take to materialize.
It's a long, long runway, and it's good to see you. Microsoft is down by a little more than 2% in early trading. Talk about a lineup a little bit later on, 1:30 Eastern Time, a Bloomberg Surveillance Fed special. Here is your lineup. Bob Michael of JP Morgan, former Fed Vice Chair, Rich Clarida, Diane Swank of KPMG, former New York Fed President, Bill Dudley. That's just a snapshot. There's a lot more than that. Tomorrow, Scott Devitt of Wedbush, Jim Zelter of Apollo, the Barclays CEO, CS Venkatakrishnan, and the former Kansas City Fed President, Esther George. We'll see you a little bit later this afternoon from New York City. This was Bloomberg Surveillance.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Futures absolutely flying with 30 minutes to go until the start of cash trading. I'm Katie Greifeld.
I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, countdown to the Fed. Officials expected to hold rates steady today while signaling a potential cut in September. Meanwhile, tech stocks rebounding despite disappointing earnings from Microsoft. Up next, Meta and Qualcomm report after the bell. And Boeing tags Kelly Ortberg as its next CEO. Of course, he's taking on one of the most complex turnaround challenges in corporate America. Let's get a check on where markets are trading 30 minutes until the cash session. And like I said, futures absolutely soaring right now. The S&P 500 up about 1.3%. Interestingly, it's big tech leading the way. The NASDAQ 100 up more than 2% pre-market, even with that disappointment from Microsoft. And the bond market relatively quiet right now. 10-year yields only down about 3 basis points, Shonali, but of course, that could change at 2 p.m.
Let's take a look, Katie, at some of the stocks moving pre-market here. We're talking about Microsoft Azure cloud computing service posting a slowdown in quarterly growth. You do have Microsoft paring some of its losses, now down about 1.7%, and Boeing keeping an eye on it, up more than 1% pre-market as it appoints, of course, Kelly Ortberg as its next CEO to succeed David Calhoun.
And we also want to take a quick check on NVIDIA because I mentioned that futures are flying. A lot of that has to do with what's going on in NVIDIA, surging 7% pre-market after being renamed as the top U.S. chip stock pick by Morgan Stanley analysts. Let's bring it all together with Bloomberg Technology co-host Ed Ludlow. There is a lot to talk about when it comes to big tech. NVIDIA, of course, soaring right now, but let's actually go back to Microsoft. It reported yesterday a bit disappointing.
Yeah, don't miss street estimates.
Yeah, there you go.
Pretty simple game, isn't it? I mean, I think we've got a dose of truth and reality. The eagle-eyed investor will look at the earnings transcript and the comments from CFO Amy Hood, and she was talking about capital expenditures. So they jumped to 19 billion from 14 in the prior quarter, and she said this is a 15-year time horizon to monetize that capital expenditure. And that's the question that's been for investors, the money machine. I talked about it with you guys all week. For every dollar you're putting in CapEx for infrastructure, how many dollars are coming out on top line growth? They gave us numbers on top line growth. It just wasn't enough. It never is, really, is it?
Well, with also what a big client Microsoft is to NVIDIA, you do see NVIDIA on the rise this morning. What can we see ahead for that stock?
Yeah, look, there's the Morgan Stanley top pick call, but I would sort of extrapolate out and by association look at AMD. So AMD modestly boosted its MI300 or AI accelerator forecast to $4.5 billion. You know, NVIDIA will do, what, $100 billion of sales this year? So you either look at it and say AMD's chipping away in a minimal way at the market share, or the gap's maintained, and if AMD is forecasting that the investment cycle will be sustained, great news for NVIDIA that basically controls 99.9% of the market.
And of course, that's been a bit of a problem for the likes of Intel, for example. And we got some reporting yesterday about their turnaround plans. It seems like investors actually cheering that on this morning.
Yeah, remember that the point of difference of Intel is that it has a foundry or fab business it's trying to get off the ground to become a third-party manufacturer. Our sources are saying that thousands of job cuts will come to a company that has still 110,000 headcount globally. But earnings have been really disappointing. And on the product side, in the AI accelerator market, we said NVIDIA 100 billion this year, AMD 4.5 billion. Intel might do 500 million in the second half of this year. So they're not catching up there. The data center and PC markets are difficult. And you know, when I speak to Lisa Su at AMD, I think we'll talk a bit about PC because I'm trying to understand what's going on. It's just not going very well for Intel. That said, I don't know if we have the shares up or not, but investors usually welcome prudence and cost cutting to get yourself out of a hole.
2% pre-market.
Oh, nice.
There you go.
Yep.
Bloomberg Technologies' Ed Ludlow. We're moving on from here. Big week of tech, of course. We'll keep an eye on it all with you. But we're also watching BGC Group reporting results yesterday with revenue of more than $550 million and nearly $38 million of net income, adding momentum for a good year for the brokerage company. Shares outpacing the S&P, as you can see. Joining us now is Howard Lutnick, Chairman and CEO of BGC, also Chairman of Cantor Fitzgerald. And let's talk about performance for a second here. BGC, you looked at equities, it was down. Every other business really was on the rise. What was driving performance, and where are you going to be making most of your money from this year?
So BGC, for years, was in the market where there were zero interest rates. And so people sort of forgot about us. We're the world's most valuable wholesaler. So everything in the world that you guys talk about and trade, we're the wholesale market. Like, who does Goldman Sachs trade? Who does JP Morgan call when they want to do their trades? They call BGC. We're the wholesaler. So with interest rates back, our stock was up 90% last year, up 30% this year so far. And our business is on fire. Revenue is up 11.7%, profits up 19.2%. And the most exciting thing, we're launching in September, pretty soon, a competitor to the awesome monopoly, Chicago Mercantile Exchange. They do 100% of futures in America. And now FMX, which is run by the largest wholesaler in the world, we brought in some partners, 10 of the largest banks and trading firms in the world, JP Morgan, Goldman Sachs, Citadel, you name the list, they're all on the list. In September, we bring competition, so I think our stock's going to be fire. Obviously, we're going to try to do the 90% again.
Right.
We got some work to do in the last bunch of months.
Let's talk about that competition because, of course, Terry Duffy of CME has had some words for you both on his earnings call and in the media. And it was actually the first question on your earnings call. Basically, Terry Duffy criticizing you clearing trades through LCH when it comes specifically to treasuries. We know that we've reported that you've struck a deal with LCH rather to basically cross margin with treasuries. Do you foresee any issues there?
No, that's what I found so fascinating. You've got the CEO of the Chicago Mercantile Exchange worth $70 billion, right? With a monopoly, the only exchange doing futures. Now, here we come with our competition, and we are just in his head. Oh my gosh, for him to talk, he said nasty things about me. I mean, imagine saying nasty things about the guy who's going to compete with you.
Well, he says he's not going to sit by and watch you take share. At the end of the day, I think Katie and I are both wondering, have you talked to him about
what's he going to do? Do a dance while I take share? I mean, look, he's got 100% market share. There's no chance we don't take share, and we're going to take serious share because we've got partners of all the big banks, all the big trading firms are our partner. So LCH clears interest rate swaps, right? So dollar-based interest rate swaps. SOFR futures are really a future for swaps. So if you can do both things together, it's really efficient, right? Because you're just basically, it's like stock futures, which you talk about, and stocks, right? They're a good hedge for each other. That's what interest rate swaps and swap futures or SOFR futures are. So we will have amazing cross-margining opportunities, and therefore we're going to bring this competition. And investors have not really understood how exciting that is within BGC's stock. So I think what will happen is we're going to launch in September. We're going to come out strong, but it's a marathon. This is not a sprint, and you know that.
How much volume could you do in year one?
Well, I think year one, we're going to do, our goal is to have the world record open interest, meaning trades that are sort of parked at our exchange, where investors are sticking it out with us. They're not just coming and going, they're staying. We expect at the end of the first year, we will have the record for the most open interest ever for a new exchange. And that will bode incredibly well. So that's what I'm looking forward to. That's the ribbon we're going to cut. The most open interest ever for an exchange.
Well, we have that on record, so we'll have to check in with you on that after
year
one. But you mentioned the stock. I want to talk about the stock because I was checking. It's up 89% over the past year. But you pointed out in the earnings call that you only trade at 10 times earnings, and you cited that as a reason why you're buying back the stock. What do you think is a more reasonable valuation?
So we're a member of the S&P 600, which is sort of like the mid-cap stocks. We're not, unfortunately, we've got a long way to go to catch NVIDIA, you know? It's sort of the 3 trillion sort of world. But so, you know, our stock is 11% revenue growth, 10% for the year, right? Just had 11 this quarter, and 19% profit growth. If you compare that to other S&P 600 stocks, they trade at 25 to 30 times. And we're trading at 10 times. And you say, okay, other stocks in the S&P 600. And I'd say, well, those that trade 10 times earnings have zero revenue growth. So I'm trading like a zero revenue growth company when we're really 11% top line revenue. And the reason for that is because all those years of zero interest rates, people sort of forgot what a great company we are. You know, I used to describe us like Gillette. You know, every morning, all the men in the earth wake up with a beard, and some of them need to shave. Not me so much, but some need to shave. Bonds always, there's just going to be more issued. If you're in the bond business, I promise you next year, there'll just be more to trade. Good business for you as well.
Speaking of trading, you were bang on when it came to kind of seeing the direction of interest rate cuts this year. You never really thought we were going to get 5 or 6. You said September was when you would see one. Now the market is aligned with what you had said many months ago.
How about that, right? I said it in December. Now the whole world believes they're not going to cut today and they're going to cut September. So they basically were saying, yeah,
what about next year? What about next year? You think about the pace of cuts moving past September, the election coming up. A lot of people are thinking about what it would mean for Trump versus Kamala Harris to take the office, whether those tariff policies will be inflationary going into next year. How much room will there really be to cut rates going into 2025?
I think both candidates, both would like to cut rates. So that's good for the bond business, right? When you have everybody running, you have 100% coverage of people in politics want to cut rates, right? So I think we get a September cut. I think that's in the cards for sure. And you saw Germany had negative growth. I mean, negative growth from such a big economy like that is going to drive all the central bankers who are now looking to cut. All right, so it's really, that's sort of the word out there now, cut. So September, I think the market's building in a 100% probability of a cut now. How about that? That's a good percentage, 100% is sort of it. I think there'll be some cuts next year, but you have to remember, zero is just not a thing, okay? It was a manufactured thing to get us out of the great financial crisis, right? So it's just, and the pandemic, it's just not a thing. So I think a couple of cuts, maybe. In the mid-4s is a reasonable rate for us to live and breathe in. So I think 2 or 3 cuts next year. I'd say 2 cuts next year, 1 in September. And that's the whole thing. It's not, unfortunately, it's not that exciting. It's not 7 cuts and then 7 hikes and then
all the way
7
back
cuts.
to zero. It's just not happening.
Yeah, no chance. Zero chance. We have a good economy. We have good interest rates. For the Fed, it's their tool, right? If they, at zero, what tool do you have? Right? You can't, what did they do? Quantitative easing. You're like, how is that even on the menu? What, they buy all the bonds of America? But you have to remember, as the Fed runs off its balance sheet, okay, that means I'm not buying bonds, you are. That's tightening. It's like, it's cutting, you know, it's cutting off your credit card. For the economy.
So, you know, if you think about the path forward here, a lot of people are waiting for stability in the markets to finally see more IPOs. Cantor Fitzgerald, big underwriter in the IPO market. What's your expectation for the year ahead? And do you see bigger or smaller companies really coming to fruition here? It's really a market that is hoping for that small cap rebound.
So Cantor's in a really good place. I mean, we're 3rd so far this year, and it's, you know, we're going on, you know, going into August. So we're doing it, we're in a really good spot. Cantor's got a great healthcare franchise. Now, we don't do the big giant companies. We do the smaller companies where we focus on raising them for phase 2 and phase 3 drugs. Sort of one of my favorite days of the year is our healthcare conference because we're not sort of pumping up big companies. This is where all of the new developments in biotech and biopharma present themselves. And it's so fun to see the things that are happening, and we're helping them raise money. So our IPO business is very successful. I think the market 2025, you're going to see the IPO market open, and you're going to be talking about companies. And on this show all day, you're just going to have fire talking about, because there's so much pent-up demand. So many companies want to go, right? And as the market starts to crack, which we're feeling now, right? They're going to start coming. You're going to start seeing 3 a week, Then you're going to start seeing 4 a week, and next year, by the middle of next year, 5 a week. They're going to be coming hot and heavy, and you guys are going to be awful busy on the show.
Well, that's great news, of course, for the news business. Howard, don't go anywhere. We're going to take a quick break, a quick check on futures and markets right now, because there's a lot of action under the hood. You take a look, of course, at the futures there, but we should also flip up the board and take a look at some of the single stock movers right now, because NVIDIA, of course, really off to the races, up almost 8%. Pre-market, a different story for Microsoft, down 1.6%, but that loss was a lot bigger just a little while ago. Meanwhile, take a look at CrowdStrike, up slightly, and then Boeing there, after naming its new CEO, up about 1.4%. This is Bloomberg.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
And now to high interest, a look at what's making headlines around the world today. The Bank of Japan raised its benchmark interest rate to around 25 basis points from a range of 0 to 10 basis points. The central bank also unveiled plans to halve bond purchases, underscoring its determination to normalize monetary policy. The yen has gained against the dollar on the move. And Israel said it assassinated top leaders of Hezbollah in Beirut and Hamas in Tehran, a show of the country's willingness to risk retaliation and an escalation of regional tensions while hunting down enemies abroad. Iran's supreme leader spoke of retaliation, vowing that Israel has prepared the ground for its severe punishment. And in the race for the White House, the presumptive Democratic nominee Kamala Harris has wiped out Republican nominee Donald Trump's swing state lead. According to the latest Bloomberg Morning Consult poll, the vice president overtook the former president in Arizona and Nevada, and she has more than doubled Biden's lead in Michigan, Katie.
And let's stick with politics, because we're back now with Howard Lutnick. He is the chairman of Cantor Fitzgerald and also a political donor as well. I know that you're hosting a dinner on August 2nd, basically asking attendees to pay $25,000 to attend, and even more so if they want, of course, a photo.
It's going to be a great
Donald
chicken.
Trump.
It'll be really great chicken for
really good
$25.
chicken, not rubber. But how much are you looking to raise here? Are you trying to set any sort of record here when it comes to fundraising?
I think we'll raise over $10 million for the evening. And I mean, what an honor to have President Trump come over the House. We've got really a great crowd will come. I'll probably keep it to 100 people, so because I don't want it to be too big. And it's really, he gets to talk, he gets to meet, and he hosts a round table. So the biggest donors who pay $250,000 sit at a dining room table and spend a half hour just asking him questions and talking. And he needs money, right? It's a race now. It's a hot race now, and Donald Trump needs the fundraising, and I'm trying to help every way I can.
To that end, you actually donated to the 2016 Senate campaign for Kamala Harris. How do you think her entrance into this race changes the game?
Well, putting on me what my wife does is not really fair. So my wife.
It's an interesting
that's a
dinner
balance.
conversation.
There's a good balance.
Yeah,
In every marriage, there's a good balance. But my wife actually has moved over to Donald Trump, which is unusual for her because she says Israel is her number one, policy, her number one issue, and she knows that Donald Trump literally sat down with my wife and told her, I will be the best president for Israel. I will protect Israel and take care of them. So, even in my house, we have unanimity around Donald Trump.
And of course, you have big plans at Cantor Fitzgerald with FMX as well. But if Donald Trump were to win, are you angling for a spot in the administration? Would you serve?
The rules are if the president asks you to serve, you kind of have to say yes. I'd rather help him with transition. I'd rather help make sure they put great people in the administration. I mean, that's the most important thing is you have the people around you are smart and capable. So I'm going to offer to help him there. But if he asks, you got to do what the president asks you to do. I'm in love with running Cantor Fitzgerald and BGC, though. I just want to be crystal clear.
Right.
I love
I
what I
want
do.
a little story time. How did your relationship with Donald Trump develop, and how did you become such kind of a critical part of this fundraising effort?
Well, I've known him for 30 years. I mean, when you're in New York, I've known him for 30 years. If you go back and look at the first season of Celebrity Apprentice, I was a guest appearance.
Oh,
right? So, I mean, I've known him a long time. This isn't like politics, right? I've known him a long time. He's extraordinary. I went with him to a Minnesota rally, okay? And, I didn't know what to expect. I've never been to a rally with him. It's like going to Mick Jagger to a rock concert. They're lining the streets, thousands of people lining the streets, 15,000 people in the arena, and 25,000 outside watching on a Jumbotron. And you just can't understand what that feels like. And then when you see it, you're like, holy moly. So they let me introduce J.D. Vance. So I walked out in this rally, right? And they're cheering. It was a rock concert. I felt like a guy like me doesn't usually feel like a rock concert sort of guy. But
Howard, do you worry about some of the comments that J.D. Vance has been making lately about childless women and what it could mean for Trump's campaign?
I think the vice president quickly moves to behind the president. Lots of things people talk about. They try to make the vice president something, but the vice president's job is to strongly support the president of the United States. That's their job. Right?
So are you not then concerned about the speech he gave at the RNC, for example, which was very anti-Wall Street?
Well, I think he wants to bring, he wants the common people, right, the people in his neighborhood where he grew up to feel that they've got a voice in the White House, which I think is really important, right? And I think it will resonate with the people on Main Street. But the fact is, the only policy that's going to matter is by the President of the United States for both parties. Whoever they pick is a good running mate, is a smart person. They're a heartbeat away from the Oval Office, as we know, but, and Kamala was closer than most people.
That's true. What's the Trump trade, in your view, as somebody who knows him?
I think the Trump trade is a broadening of the base, right? So what we've seen is this rally has been the Magnificent Seven, right? He's going to cut corporate taxes, which is a broad-based move. He's going to cut regulation, which is a broad-based move, and he's probably going to put on tariffs on China, which isn't good for the Magnificent Seven. So I think what you've got is a constraining of the Magnificent Seven and a pounding up of the rest of the market. So I think if you were going to do a trade, it would be long the broad base, right, against the Magnificent Seven, which is sort of the opposite of what we felt for the past year.
So Howard, somehow we only have a minute left with you. You were with Donald Trump in Minnesota. You were also with him in Nashville at that Bitcoin conference where you announced that Cantor Fitzgerald announced a new multi-billion-dollar effort in Bitcoin financing. Can you give us any details on what the potential timeline for that is?
Sure. So, securities markets, everybody finances securities and nobody finances Bitcoin. Bitcoin market cap is over $1.3 trillion. So we've figured out how to do it, how to custodian it. We'll work with other custodians, but they're going to have to work with us because we have to control the Bitcoin. Can't let it get hacked. And we're going to start lending on Bitcoin. We're going to start with $2 billion of loans, and then we're going to go up in increments of $2 billion. So it'll be a huge business because it's a huge asset. And it's only Bitcoin. We're only focused on Bitcoin, but Cantor Fitzgerald will be financing Bitcoin. And I think it's a fun business, and it's a big asset class, but it's more like a commodity. People talk about it like it's a currency. You can't buy bread with something that goes up and down. So I think of it as a commodity.
Howard, I got a producer in my ear. We have to have you back very soon, maybe in September. Our thanks, of course, to Howard Lutnick. He is chairman of Cantor Fitzgerald. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Open Interest. Let's take a quick check on futures right now because they are solidly higher and then some. The S&P 500 up 1.3%, even more so if you take a look at big tech, 2.2% higher before the bell, and even the small caps joining in on the fun. Now, coming up, we speak with State Street's Maria Waitman on her call to buy the dip in tech. That's next. This is Bloomberg.
Names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
All right, we are just moments away from the start of trading. This is Bloomberg Open Interest, and I'm Katie Greifeld. Of course, it's a big day. It's Fed Day in the middle of what is an enormous earnings week, and you take a look at what that means for the pre-market. The S&P 500 up 1.3%, even more so if you take a look at big tech, up about 2.3%. The bells are ringing. We have BlackBerry, we have Armada as well. Of course, ringing those opening bells on NASDAQ, on the NYSE. Take a look at where markets are trading. Just, of course, a few seconds into the trading day. Of course, we have a lot to look forward to, the Fed being one of those just events. But you can see the S&P 500 really rallying right now. The NASDAQ 100, that's going to refresh. You can see 2.3%. The Russell 2000, again, it's not exactly leading, but it's not falling either. The Russell 2000 up about 0.6%. But one stock to keep an eye on at the open, that is Starbucks. The coffee chain delivered results that were in line with expectations, easing fears of another meltdown. You can see a little bit of a relief rally underway. Shonali, shares currently up about 6.5%.
Also, Katie, keeping an eye here on Boeing, up about 1.5% at the open. Kelly Ortberg has been appointed as the new CEO to succeed David Calhoun. Of course, this has been a long-awaited move, that CEO search. Also watching shares of Microsoft. Remember, Azure growth disappointed investors. Now Microsoft down about 0.7%. AMD, though, soaring, up more than 9%. It's rising as AI is boosting the chip makers' revenue forecast. We're going to get a closer look at Microsoft and AMD with Bloomberg's Abigail Doolittle.
Absolutely, Shonali. These are, of course, the two big movers on the morning relative to tech. So here's another look, and we're putting, in this case, AMD on top, 8%. A nice move higher after the company basically on the surface an inline quarter, but folks really liking the sales outlook, that revenue outlook on AI chip demand. In addition, in the month of July alone into today, the stock had been down 15%, so a bit of a relief rally. Not so much for Microsoft, down 1%, and also similar to AMD on the surface, basically a clean quarter, but beneath the surface, that Azure growth, as Shonali was just talking about, disappointing to some degree, down 29% sequentially as opposed to being up 31% in the quarter before. Returning back to AMD, though, this is something else that investors like, the fact that we do have sequential growth on the top line, 8.9%, certainly better than the first quarter, a little bit later than the fourth quarter, but the fourth quarters are typically kind of light, and on a year-over-year basis, big growth. Let's bring it home, though, with Microsoft, Katie, and put Microsoft into the context of Apple, and of course, NVIDIA as a stock. We'll be taking a look later, next hour, in terms of the big rally. But despite that, let's put NVIDIA into the context of Microsoft and Apple. Apple is clearly in white, the world's most valuable company, a market cap of $3.355 trillion. Microsoft falling away, but still in the $3 trillion club. And then take a look at NVIDIA, all the way down there, $2.6 trillion, as that too far, too fast rally is fading, at least right now, although on the day, a bit of a rebound.
Oh, big time. Of course, NVIDIA really surging right now, propping up the whole market as well. Abigail Doolittle, Thank you so much. And joining us now for more, I'm pleased to say we have Maria Waitman. She is head of equity research at State Street Global Market. Great to have you back with us. And you had the punchy call actually earlier in the week to buy the dip in tech. We did see Microsoft disappoint, but turns out you probably feel pretty vindicated right now.
Oh, yes, thank you very much, very kind. I mean, our view on tech is that it's still, despite, some slight hesitation in earnings, it's still by far the best earnings there are. I mean, if you look at what consumer companies are telling us, airlines, energy, materials, they all talk about kind of weaker guidance, price inability to increase prices, margin pressure, and tech. Okay, it's growing. I mean, we splitting difference 29-30% or 31. So there is still quite strong earnings growth in technology stocks. So that's really kind of how we see market.
And Maria, if you take a look at the expectations, of course, when it comes to the Federal Reserve, how much is the dot plot going to matter when you think about forward discounted cash flows here? Until now, there has been that expectation for that September rate cut, but how sensitive is the market to the forward look when it comes to the valuations in these names?
Yeah, no, absolutely. That's a really important point. And I guess today's market is not expecting much to happen today, and it's all about guidance for September, for year end, how many cuts we are going to get. And market is very confident that we'll see start of the cutting cycle in September, and that's great for the kind of overall market for kind of every stock. And then we have to kind of debate whether it's this kind of the great rotation in small cap can potentially happen or not. And as I said, our view is that for the rotation into small cap to happen, you need to see broadening of earnings. And given what companies are telling us, where the kind of overall guidance is, it's not broadening. Majority of earnings remain in technology stocks, and that for us means that tech will continue to lead the market.
That's really interesting there, of course, when you think about the overall market, as you call it. Sounds like you're saying that, of course, earnings aren't going to be the catalyst for that broadening out. Do you think that the Fed alone, if we did get maybe more rate cuts than expected, would that be enough to juice small caps, even if earnings continue to be a little bit soggy here?
No, I think I'll be skeptical. I mean, for us, you need to kind of three conditions to happen for the rotation into small cap. One is positioning, and it's very clear that market is very crowded in technology stocks, and arguably that's potentially why we're seeing some weakness. And I mean, interestingly, if we look at investor behavior ahead of corporate earnings, I think for the last 4 or 5 quarters, we've seen the kind of exactly the same picture, is that tech sells into earnings ahead of earnings season, as position is very crowded. And then when technology companies kind of deliver earnings, we see some softness in the rest of the market. Then market goes back to technology stocks, as that's kind of the large cap quality game it remains important, as earnings, as you say, remain overall soggy. So that's kind of the game plan we are following. So a little bit of softness in tech ahead of earnings.
Maria,
wait for results. Hopefully they deliver, and yeah.
You still look at a market here that has more than 3 rate cuts priced in through the end of January. And if you don't see those 3 rate cuts at least materialize, what else starts to break in this market as interest rates stay high, start to break into those companies that are still relying on a lot of leverage at these high interest rates, on consumers that are levered up as well?
Yeah, no, I would definitely agree with that. We're seeing quite a lot of stress for smaller companies, quite a lot of stress for lower income consumer, and that's where the pressure is. And mind you, the rate cuts exactly the same as we talked about rate hikes. They work with long and variable lags. So even if Fed cuts delivers those 3 cuts that market is kind of expecting before January, it's still not clear that we'll have the kind of real economic impact and kind of ability to service those debts that getting more and more expensive for certain groups of the market. So yes, financial markets will get very excited, but in terms of debt servicing costs, we are going to see those kind of stresses for certain parts of the market to continue. So that's, I mean, rate cut is not a silver bullet, really, when we've been at fairly high interest rate for some time.
And I want to talk a little bit more about the concept of broadening out, because we were talking about it really in terms of size, large cap to small cap. But if you stay within the small cap space, I mean, do you see any sectors, industries beyond tech, of course, that are worth venturing into right now?
One place that's kind of getting increasingly interesting is healthcare. So that's one sector where investor positioning is particularly light. And the sector still has a decent cash flow, so that's important, and that's important to us. Margin pressure is maybe less challenging. So I think healthcare probably quite an interesting sector. Again, defensive sectors that fits with kind of our overall strategies that economic slowdown is coming.
So what's the trade here, Maria? At the end of the day, do you take money out of certain more profitable bets that you've been making? Do you take money out of cash? Where do you get that dry powder from, and where do you deploy it?
I mean, we've been in this cash plus tech barbell for quite a while. I think that still makes sense to us. Yes, tech has suffered a little bit recently, but as I said, that to us is a buying opportunity, because it still is likely to maintain its leadership as earnings picture is so much better than anywhere else.
Maria, thank you so very much. That is Maria Vaithman of State Street. Now, coming up, a new CEO at Boeing. We've been talking about it. They have some headwinds to navigate over there. We're going to have details on that next. Stick with us. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee, or I'll be an investment committee, and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. We're going to take a quick check on stocks. It is a green day today. We are watching the S&P 500 rise to the tune of 1.3%. Even bigger gains in that big tech index. NASDAQ 100 up 2.3%. Russell 2000 getting a bid, but not as much, only up about 0.25%, Katie.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, TD Cowen downgrading McDonald's to hold and says the shares will be range-bound for the foreseeable future. The analyst also saying that the burger giant has a tall hill to climb when it comes to improving its value perceptions versus its peers. Next up, Morgan Stanley renaming NVIDIA as its top U.S. chip stock pick for the first time in 6 months. The analysts over there say that the recent sell-off provides a good entry point, and you can see people taking them up on that view right now. Shares up 9.3%. And finally, we have Bernstein raising its rating on PayPal to outperform. The payments company boosted its forecast for profit and also increased its buyback plan. The analyst sees PayPal having steady beats and raises over the coming quarters. Shonali.
And one stock to watch here at the open, of course, it's Boeing. Shares are higher on the news that Kelly Ortberg will succeed Dave Calhoun as CEO. Bloomberg Intelligence senior analyst George Ferguson is here with more. And George, my major question to you is, when you think about the CEO, the next CEO of Boeing, does Kelly Ortberg fit the bill?
It seems, unfortunately, that we lost George. And I mean, that's the question that basically everyone is asking. I think when you think about what this new CEO has in front of them, both really reaffirming that these planes are safe and also sort of recovering that reputational damage that they took on with all the different incidents, it's a tall order, obviously.
The market likes it so far, if you see the stock reaction here. Of course, it adds a lot of certainty here to the story of Boeing. We're going to go back here to George Ferguson. We have got him back. George, busy week for you over here, and you see the market reacting well. Sorry, we still do not have George with us, but we are going to talk more about this story here, because interesting to see a lift here in the stock for Boeing, 1.7% higher. But of course, this is a stock that has taken a lot of pain this year, especially when you think about the oversupply problem, Katie, in the market.
It's also interesting that Ortberg, he's 64 years old, so he's not exactly new to this company, coming out of retirement to do this. You have to wonder what the plan is. Hopefully we get George back to talk about all of it. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Open Interest. Let's take a look at the stock market. About 20 minutes into the trading day, boy, it is green across that screen. You can see the S&P 500 up by more than 1%. Even more so, if you take a look at the NASDAQ 100, your big tech names up 2.2%. Overall, small caps, they're doing okay, up about 0.2% on the Russell 2000. But as promised, we are going to talk about Boeing, of course, naming a new CEO. We had been awaiting that. Let's bring in Bloomberg Intelligence Senior Analyst George Ferguson. George, I hope we really have you because I really want to talk, of course, about Kelly Ortberg. What do we know about him?
So, we know about his career in the industry. He's with suppliers, Collins, helped merge them into RTX. We know he was in retirement as of 2021, coming out to take the job. Engineer, I guess he spent some time at Texas Instruments, but he's been sort of off the radar here for sort of 3 years or so. I was a bit surprised by the, by the call, but I don't know. To me, it feels a little bit like a caretaker CEO again, right? So we have somebody, I think, that's about 64 years old. Can't imagine they've got a long runway for Boeing. I think it's indicative of some of the challenges of finding a CEO for this company that's in really some difficult straits right now.
George, can you speak a little bit to the challenges that will lie ahead for Kelly Ortberg?
Yeah, I mean, when I look at his experience, right, it's with smaller component manufacturers. If you think about Boeing, Boeing is a big systems integrator, right? You bring in parts from all around the globe and you turn them into airplanes in the factory. And so to me, that feels a little bit like a different skill set. And that's been the challenge here at Boeing, is sort of bringing all those components in and turning them into airplanes with top-notch quality. So I think that obviously that's number one, is stabilizing the manufacturing. But we saw Boeing during the quarter, they burned another $4.3 billion of cash after CapEx. So they now have about $13 billion on the balance sheet. They're starting to get dangerously low. They may have to come to the capital markets to raise money if they keep burning cash like this. And so what they really need is a ramp up of builds for the commercial product in the second half. It needs to be strong. It needs to be soon, or they'll be back in capital markets. And so we're looking for Kelly really to get motivated on that. And then on the way to doing that, he's going to start by talking to the machinists union that wants a pay increase. Their contract expires in September. They want a 40% pay increase. So he's going to go right into the deep end immediately.
Yeah, absolutely. You think about the labor challenges there as well. But it's a good reminder that we did see Boeing actually report earnings today, second quarter, missing estimates on revenue. We also heard from its main competitor, Airbus, earlier in the week. And a lot of analysts called out the positive surprises for Airbus. I mean, when it comes to this real duopoly between Airbus and Boeing, how does the competitive landscape stack up between the two right now?
Yeah, look, they're both struggling right now with supply chain. Boeing's struggling a lot more, but Airbus is just not getting the throughput they want. They've had to push back some of their larger increases in production out to sort of to 2027. They like to give us long horizons on build rate. They talked about problems that, with LEAP engine deliveries, which come out of GE and Safran, which I thought was doing a relatively good job of getting their engines built compared to their competitor RTX Pratt & Whitney. So look, the duopoly is, when one thing affects one of the duopoly, you can usually count on it affecting both. And so nobody's really getting, I think, a firm sort of leg up here because of these supply chain challenges. But Airbus is operating, I think, a lot smoother than Boeing is right now.
George, really curious here. I also just want to nod to this kind of $500 million cost that Delta has also said this morning that they would be incurring tied to the CrowdStrike outage.
Yes.
What does that number strike you as?
It's large. 500 million is large. I think Delta, look, they're hiring attorneys to go out after CrowdStrike, so you'd expect the number to be big, when they bring it into the marketplace. I'm sure Ed Bastian very upset because Delta had generally done a pretty good job of operations. You know, but if you look at the industry, we see operational problems around it over time. American had this spate of problems. Then we saw Southwest had this spate of problems. Now they've landed on Delta because CrowdStrike was probably too embedded in some of their, you know, some of their systems. It's challenging to always be proofing your supply chains, making sure there's no chinks in the armor. In this one, he had one. I think again, Ed Bastian, very disappointed. I think you know, took a bit of a beating with his customers over this, and coming out with, I think, with a big number to show he's very upset.
George Ferguson, we thank you so very much for your time. That is Bloomberg Intelligence's airline analyst. Now it's time for the Wall Street Beat. We're talking about Ares today, setting a new record by raising over $34 billion for its latest direct lending fund. Of course, that number includes leverage. Joining us now is Bloomberg private equity reporter Allison McNeely. That $34 billion number that they've compiled, we're talking about the capital base that they're putting together for new deals and lower middle market, upper middle market. How does this number compare to what's been going on out there right now?
Well, it's really a continuation of a theme we've seen in the race into private credit. It's a new record. Ares raised about $15 billion worth of equity commitments. When you add leverage and separately managed accounts, that gets you to that record $34 billion figure. By comparison, Goldman Sachs gathered about $20 billion a couple months ago. And so we're seeing, you know, players raise ever larger funds as they look to essentially step in for the banks, which have pulled back from middle market lending, and make some money doing it.
So $34 billion, that's a lot of money. Are there enough deployment opportunities? I mean, are there any concerns about that?
That's a really good question. So Ares' first quarter results actually came in a little bit light a couple of months ago because of more muted M&A activity. Therefore, there were fewer deployment opportunities, fewer opportunities to lend. So that's a really big question that's kind of looming over all of private credit right now, but particularly sort of direct lending, middle market loans. Are we going to see that pickup in deal-making activity that presents opportunities to lend money?
Allison, I would love to also talk about KKR results here for a minute while we're sticking on private markets, because you are having KKR shares hit a record high right now. Profit is improving. What are they showing and putting up on the board here?
So KKR has been talking a lot over the past couple of months about the improving picture for regular way private equity deal making. They reported a soaring profit in the second quarter, for up 49% on a key metric, because they sold more assets than people largely expected them to. AppLovin share sale was one deal. A sale of their stake in the ADNOC pipeline network was another. And they say there's more of that to come. And the deal-making environment for private equity is improving.
All right, Allison McNeely, great scoop. Really appreciate you sharing some of your reporting with us. And we do have to get to some breaking news right now. Uber and Lyft, the NYC taxi regulator, agrees to not impose those new rules on both of those rideshare companies. You can see stocks rising right now in response. Uber up 2%, Lyft up 1.8%, now 2%. Let me just read that headline one more time, that the NYC taxi regulator agrees not to impose those new rules on Uber and Lyft. You can see the relief rally right now. We'll continue to follow that story, of course. End markets on this very, very busy day, because coming up in the next hour, we have former Federal Reserve economist Claudia Sahm. We'll speak to her about what she's expecting and why she thinks that the Fed should cut interest rates. That's next. This is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. Coming up today, it is Fed Day. We'll check in with Danielle DiMartino Booth. She's going to be in studio. She is one of our go-to experts on the Fed. We'll talk to Anurag Rana, Bloomberg Intelligence, on those Microsoft numbers. I don't know. I thought they were good. I don't know why the street's kind of
totally
them. I mean, 29% growth in cloud business. Okay, it slowed from 31%, so I'm selling the stock?
Yeah, I know.
I don't get it. And we need to get the latest from the Middle East, so we can do that with Ethan Bronner. He is our Bloomberg Israel bureau chief. He's in Tel Aviv. We'll get the latest reporting there. Let's kick it all off with Mr. John Tucker. We cannot get rid of this guy.
Just a little while longer. We're brought to you by Interactive Brokers. Another hour. Interactive Brokers charging U.S. dollar margin loan rates from 5.83 to 6.83%. The rate subject to change. Learn more at ibkr.com/compare. You have 8 of the 11 major industry groups in the S&P 500. They are higher right now. And leading the way, yes, you guessed it, information technology. That's home the semiconductor stocks like NVIDIA, AMD, and even Intel. AMD shares jumping right now over 9%, near the biggest intraday rise since February. The chipmakers' adjusted earnings per share revenue beating estimates. Analysts were pretty positive about the sales boost from the AI accelerator. Ahead of the Fed meeting, broad gauge of labor cost, closely watched by the Fed, cooled in the second quarter by more than forecast. So that supports the trend of gradually easing inflationary pressures. Right now, the S&P 500 up 74 points, a rise of 1.4%, 5510 on the index. The Dow is down 12 points. The NASDAQ 100, the tech-heavy NASDAQ 100, of 481 points. That's a rise of 2.5%. You were asking about Uber and Lyft, like what exactly is going on here. Uber shares, they're getting a lift, 2.2% higher right now. The city of New York is striking a deal with Uber and Lyft. They're going to rein in lockouts and stop onboarding new drivers. The companies, that is, in exchange, the TLC agreeing not to impose new rules on the rideshare companies. You'll recall that Bloomberg actually had reported that they'd been locking drivers out of their apps mid-shift to try to avoid paying them for some of the idle time in between rides. So that's what that has to do with. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much.
So good to have Paul back, isn't it?
Yeah, we love the Paul. We missed you yesterday.
Yeah, exactly.
Yeah, you know who really missed you? John Tucker.
Yes, I know.
Really missed you.
Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. So I feel like we're all on tenterhooks as we wait for the Fed. Will they or won't they? How will they forecast September? But there are a ton of earnings out there and some really interesting stories that are moving some of the individual stocks. And luckily, Billy Lipschultz is here, Bloomberg News senior equities reporter, joining us on that. And Starbucks was one because if I look at Peter Saleh, for example, he was really negative on the quarter. He was like, look, it's just not great. Like, China's not great, but yet the stock is up.
A lot of people were saying it's not great. This is the typical better than feared quarter, and that's showing up with the stock. Coming into the result was down 25% in the last 12 months, even though, as Michael Halen from Bloomberg Intelligence put it, global same-store sales could decline by low single digits through the first half of 2025. He cites a number of issues from companies' perceived stance on Israel, Hamas, labor unions, increased prices in China. Comp sales were bad.
Yeah.
But if you're down 25% and investors are kind of continuing to throw the baby out with the bathwater, presumably it creates value. That's why the stock's up, but it's still not really that strong of a follow-through. It's up 3.1% in a day when the S&P is up more than 1%, and a company like NVIDIA is up 10%.
Right. Yeah, just amazing here. But I mean, the stock year-to-date down 18%. This, it's become, a lot of these, when I think about these big restaurant companies, are just franchising. It's a GDP story, it seems to me. Like, I mean, once you've had that burst of initial strength, and granted, they've been around a long time, but I just don't know where this thing goes.
Well, I also feel like with a lot of these companies through earnings, we're just really seeing that China weakness and really broad-based. Whether you're looking at luxury, Procter & Gamble, whether you're looking at Starbucks, Heineken, like it's really across the board that weakness is just really standing out to me this earnings season.
Yeah, and that's really one thing that we've been obviously keeping an eye on. And the big question is when you look at a company like Starbucks, it's about as discretionary as you can argue. So if the U.S. consumer even starts to feel the pinch in 2025, who's going out to spend $7 on coffee?
At my Starbucks on Route 35 in Wall Township, New Jersey, the drive-through line will be like around the block. You park your car, you walk in, nobody there.
Yeah.
People are so lazy when it comes to this whole thing.
People love the apps, but the funny thing is, well, not funny thing, is when that whole CrowdStrike issue happened, that was some of the most read stories on the terminal and online, where people in New York and outside areas not being able to use their Starbucks app to try to get their coffee.
I still don't understand what he's saying about coffee being discretionary, but that's cool. We will just slide over on that. So AMD, though, that's not up by a whopping 8%. What's happening here?
Strong results, again, touting their AI chip demand. The one thing that also stood out, we did have the big results. I know you guys are going to dive into Microsoft after this. Microsoft talking about spending on AI. So not only did you have AMD beating expectations up 8% and boosting their forecast for the full year, calling out a recovery in their PC business, you do have Microsoft talking about spending. You do have an NVIDIA upgrade, that stock up 11%. So it seems like a lot of optimism is returning, at least for the time being, back to semiconductors, which had been kind of bearing the brunt of the recent sell-off. AMD, though, still about 25% off of its 2024 highs, so still trying to claw back those gains.
And it just highlights the fact that Intel is not playing in the big sandbox with the NVIDIAs and the AMDs of the world in terms of AI. Oof.
No, they're cutting costs.
Yes, cutting costs and jobs. And,
wrapping it up, Pinterest, that stock getting hit. This is really sort of an ad story at the end of the day, right?
Exactly. Stock down 12%. Underwhelming 3Q revenue forecast. Advertising market online weaker than expected. When you look at some of the concerns that analysts are calling out, what really stood out was not only was 3Q below what Wall Street, the sell side, was looking for. Of course, according to Evercore, meaningfully below what the whisper numbers were for the buy side. So when you look at revenue coming in light, you look at adjusted operating expenses, probably stronger than people were expecting, and kind of the underwhelming turnaround, especially with some ad spend being reined in with kind of a broader uncertainty for 2024, hitting the stock really badly.
Can I rip up the script a little bit, as our friend Tom Keene would say? And Bailey, you wrote the article, so I got to ask you, what's going on with Bill Ackman and his IPO? I thought it was going to be $25 billion. Now it's going to be $2 billion. What happened?
Not even that. It was on, then it was off, now it's on again.
Yeah, we have to clarify. It's the closed-end fund, so it's not Pershing Square proper, which is expected IPO late 25, early 26 potentially. But yes, on again, off again. That closed-end fund, he had talked about $25 billion, tapping his million-plus followers on X, now reining in those expectations, now eyeing about $2 billion.
I've never seen anything like that. So what, like, I need a Matt Levine money stuff, which I think he has written about, like, what the strategy was. Like, Matt Levine was saying maybe talk about a big $25 billion deal, downsize it to $2 billion to create scarcity value.
But it's the opposite. So when I talk to people who operate closed-end funds, you normally go out and say, hey, it's $1 billion. We're going to close the books as quickly as possible. You're a former banker. Create scarcity value, make people get their orders in. But instead, you know, letting the media run with a $25 billion.
Kind of like arm twist his friends and then, like, you know, sent out a letter.
He sent out a letter. He talked up Seth Klarman's bow post being in for $150 million, which Bloomberg reported they actually pulled out of after that became public. So it's had a number of issues. But yeah, as of now, according to term sheets, expected to price Monday and trade Tuesday. But that was also something that was supposed to happen this week.
True.
So TBD based on the SEC.
All right, Bailey. We appreciate it. Thank you very much. Bailey Lipschultz joining us, Bloomberg News senior equities reporter. We do want to touch on the world of geopolitics right now. Hamas now saying that Israel has assassinated its political leader in an airstrike on Iran's capital, putting the Middle East even further on edge. The Iran supreme leader said he had a, quote, duty to seek vengeance and that Israel should prepare for, quote, severe punishment. Joining us now is Ethan Broner, Bloomberg Israel bureau chief, joining us. Ethan, what is going on the ground? What is the energy like? What is the rhetoric like?
Well, I mean, in Israel, it's really maybe surprising, but it's kind of a normal day. I mean, the people have, the home command front has not asked anyone to, to change their behavior. The airport is working normally. So at the moment, Israel is not expecting an instantaneous revenge or response. But, you know, there is a broad assumption here that Israel did carry this out. I think there's a sense of pride that it was able to do so. I don't think there's too much disagreement that the leaders of Hamas should be killed according to how Israelis feel. And that's what's going on right now. We'll see. There is a meeting of the Security Council, of the Security Cabinet of the Prime Minister where they're, I assume they're talking about whatever risk there might be of a payback.
And Ethan, there seemed to be, I think maybe over the last week or so, some sense that there may be some momentum building for some type of peace process to begin here, and then boom, these two assassination attempts. How's the government weighing perhaps the need for peace versus the need to keep prosecuting this war?
So peace is a word that people abroad talk about a lot here. People don't talk about it too much here. It's not peace. What they want is they want their hostages back. They're willing to take a break and free some people and get their hostages back, but they don't want to stop until they've destroyed Hamas. Now, second point, this government argues repeatedly and has done it for all 10 months of this war that the only way Hamas is going to give anything back is when their back is up against the wall. So only military pressure, only the killing of its leaders is going to yield to any kind of negotiations that are meaningful. I know that's counterintuitive to how we see the world, but that is what they believe works.
All right, Ethan, thank you so much for your reporting. Ethan Bronner, he's the Israeli bureau chief. He's in Tel Aviv. He is our reporter on the ground with his bureau there in Tel Aviv, so we appreciate all that reporting from a very volatile part of the world. It's getting back to these markets here. Again, a good day for the market. The S&P is up about 1.5%. The NASDAQ's up about 2.3%. So strong day for the tech sector. Microsoft was the name. We want to get a real kind of wrap up of the earnings from Microsoft. I thought the numbers were very good. Stocks trading off a little bit here. Anurag Rana joins us. He covers all the technology stuff, all the software names for Bloomberg Intelligence. Anurag, we've had a little bit of chance to kind of look back, get a little bit of perspective, frame out what we saw from our good friends, Microsoft.
Yeah, when Microsoft gave guidance for Azure last quarter, they said growth rate of 30 to 31% in constant currency. And boy, they didn't hit 31, they hit 30. People got disappointed, stocks down 7%. But, you know, if you look at it right now, they did a good job of explaining what's happening on the conference call. Stock recovered and it's only down 1%. So at the end of the day, they are adding more capacity for their data centers, and the growth rate of the cloud still very strong. Will slow down slightly because of capacity issues and not demand issues. And as they get more data centers up, you know, growth will accelerate.
Oh, okay. So to be clear, then they're saying, look, it's on us to build out all this stuff, and then all of a sudden the revenue will accelerate. This is not like a trend of slowing cloud revenue growth because of demand, just to clarify for me.
Yes, absolutely. In fact, and the cloud growth is driven in part, or I would say largely, by AI workloads because of their relationship with OpenAI. That really is the biggest driving factor. And Microsoft has an edge there over others because of that unique relationship that I mentioned. So I think Microsoft remains the primary beneficiary on the software side, similar to what NVIDIA has on the chip side.
So, Anurag, part of the discussion, I guess, probably over the last month and a half about AI has been, okay, I understand the spending aspect of it to build out capacity, build out, you know, whatever I need. Remind me once again, what's the return on that investment? So there's been some questions about the returns. How do you answer that question?
So, you know, if you are in the semiconductor world, your return is pretty quickly because the people are going to buy chips immediately. But if you're in the software world, first you're going to get those chips, create a data center, add more servers, and then create your software products, that which you're going to sell. Now, that thing's going to take time, whether it's going to take 6 months, 12 months, 2 years, and then you're going to realize that AI revenue. And that's where the entire rest of the world is, whether it's on the software side or the services side. And people need to have a very good understanding of it. Otherwise, they keep on harping on this CapEx issue, which is going to get much bigger, and which is why the chip stocks are doing very well, because Microsoft communicated that they're going to increase their CapEx even more this year. So this is really where people need to understand this, and otherwise this confusion is going to continue, not just, you know, in the next few days, but going into next quarter as well.
Well, then, to that point, you know, we got AMD boosting its sales forecast for AI. At the same time, Intel is cutting thousands of jobs. Where is Intel in this party?
Yeah, I mean, I think the biggest party player really is NVIDIA with their GPUs that are truly required for these workloads, and AMD is also benefiting a little bit from that. Intel, I think, needs to do a lot more work before they can capitalize on this particular trend.
So Intel's in like the quad, like not even close to coming into the frat house, basically. If we look at it that way.
Yeah, exactly.
How else in your space, Anurag? What else looks attractive here?
I think the fun is going to be tomorrow evening when Amazon reports and they start talking about their AI strategy, because remember, they do not have a relationship with OpenAI, but they are still the largest cloud infrastructure vendor and have more services than anybody else. They will come out and give the message that, listen, it's not just OpenAI, but other large language models as well that people are using, and they're using AWS services for that. You know, whether that's Anthropic or whether that's Meta, all these companies have their models as well, and people should be trying that.
And before I let you go, what I also found interesting was that 8 percentage points of the increase in Azure revenue and cloud revenue was attributable to AI. That was up about 7 percentage points. How do you think that winds up looking like? Like, are we going to start to see like double-digit increases here, or is it going to be a slow grind higher?
No, I think over time it will be double digits, but again, the timing is difficult. Now, when we extrapolated this number, we are coming to somewhere around 1.4 billion in this quarter. That's over 10 times in just 1 year. It was, you know, it was roughly around 100+ million a year ago. This is all the AI workloads from OpenAI. So, I mean, it is really a big number, frankly. But over time, what will also happen is there's going to be a blending between the workloads on AI and the non-AI workloads. And for us, the net beneficiary are the 3 biggest cloud vendors. And in fact, even Oracle is going to benefit from this.
All right, Anurag, we appreciate you. Thank you so very much. Anurag Rana, Bloomberg Intelligence, Senior Technology Analyst. So I think to your point, Yeah, they make a lot of money. They have to spend a lot of money.
Yep.
Give these guys a little bit of time. These are behemoths. This is not like 2000, right, where there was no profit. There's billions of dollars of profit, and they're going to have to spend some stuff, and they're making the money.
Yeah, I think so. Plus, I'm going to Apple after the close tomorrow. Now, I'm sure they're going to call out me as one of their drivers for the upcoming quarter
100%.
because I'm going to be out there buying a new iPhone for the first time in like forever. So I'm going to go from the iPhone 11 to the 16. That's going to be a mega leap. So I'm sure that Apple executives will be calling that out.
Your brain's going to explode. Like, this is just going to be like the most exciting thing. I can't wait for the day after that. All right, it is also Fed Day. We're going to break all of that down. Danielle DeMartino Booth, the CEO and Chief Strategist for QI Research. She'll be joining us next on the Eco Data, the Fed meeting, and that look ahead to Jobs Friday. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks staging a rebound. You have NVIDIA surging right now 10%. It's been renamed top U.S. chip stock pick by Morgan Stanley analysts. Advanced Micro Devices jumping on that bullish outlook that they delivered. Right now, shares of AMD up 7.7%. Meta Platforms getting ready to report earnings. That comes after the close of regular trading, and in advance of that, those shares up 2.5%. Microsoft, after their results after the close yesterday, they're down 1%, slower than expected cloud growth, the story there. Ahead of the Fed rate decision this afternoon, American companies adding the fewest number of workers since the start of the year. Wage growth there slowed. That's the ADP figures. A broad gauge of labor cost growth closely watched by the Fed. That cooled in the second quarter. That was more than forecast. And then let's wrap up with MasterCard shares rising the most in about 20 months. After profit beat analyst estimate, they saw strength in consumer spending and online payments. The S&P 500 up 82 points. That's a rise of 1.5%, 55.18 on the index. The Dow Jones Industrial Average 107 points higher. The NASDAQ 100 up just about 500 points, a rise of 2.6%. And since it's Fed Day, we got to do the yields. The 2-year, 1 basis point lower, 434. The 10-year is down 4 basis points at 4.1%, 4.01%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Thank you so much, John Tucker. He's looking at you. I don't know what he's doing there.
I know. I miss a day.
I'm winded.
Oh, he's
Yes,
winded.
exactly.
I see. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. So it's Fed Day. Everyone's pumped for it. What is Jay Powell going to say? Are they going to signal September? What is it going to look like? We're going to break it all down for you with Danielle DiMartino Booth, CEO and Chief Strategist for QI Research. She joins us in the radio studio right now. All right, Danielle, what do you think? Like, what are we going to get?
I think we're going to, I'm actually going to go with Anna Wong's kind of take on where this is going to go. She and I are thinking in a similar way. Actually, we get to meet in person tonight. But I think he's still going to couch his dovishness. I think he's going to signal September, but I think he's going to signal September softly.
What does that mean? Is he going to whisper it? Like, what is that?
He's still going to say that they're data dependent. He's still going to say that there is the chance that there is a reacceleration in the CPI, in inflation metrics. Base effects kick in the second half of this year that make it a little bit harder to see continued declines in the inflation. On the other hand, looking at real-time inflation metrics, a bunch of bond traders a long time ago introduced me to Truflation, TRU, and that hit 1.51% today, the lowest reading that we've had in the post-pandemic era. They gave me the raw data back to 2012. It's got a 0.97 correlation with headline CPI. We see where this is going. To me, at least, I think the greatest risk, because there's this huge 7-week gulf in between today's meeting and September 18th, is that there's a policy error in the making.
So you say the highest odds is that there is a policy error. Is that another way of saying the Fed's behind the curve? They should have already been cutting?
I think that's what we're saying. I think that that's what ADP is saying. I think that's what the Employment Cost Index, the Fed's preferred measure of wage inflation, is saying. We saw a big step down there. Intel, Match, NerdWallet, those were the 3 job cuts that were announced yesterday. It seems as if most companies, when they're announcing earnings, are continuing to say, until we see stronger revenue growth, we're going to keep cutting headcount. So that's disinflationary.
So because you're here, I get IBs from people who are listening to the show. Thank you so much. So one of the questions is, and it goes back to the bond market, and we're obviously seeing some steady buying come in, particularly in the back end. Where do you think we end the year when it comes to the 10-year? If we're trading right now at 4.09, we're below all the moving averages. Like, we've had a healthy move to the downside in yields.
We have, and we saw kind of this resistance at 4.14 in the 10-year for some time. And now we've broken below that, and I think that it's not a stretch to say that there's going to be a 3 handle. The question is, does the year end south of 3.5% on the 10-year? And again, it's going to be a gauge of the magnitude of the Fed's policy error. If they have to come rushing in September with a 0.5 percentage point rate cut, that could easily spook the markets.
So what does the Fed do when they start? So let's say they start in September. then what did they do? They do it every other?
That's a great question because we saw these kind of unusual pauses. It's not normal to see pauses in a hiking or a cutting cycle, at least in Fed history. Of course, we're seeing it in other parts of the world, but history tells us that once the Fed gets going, they keep going, and that means 2 days after election, right? The November FOMC is highly unusual. It's a Wednesday, Thursday meeting so that they're not meeting on Tuesday, election day. But it's very feasible that we see another rate cut 2 days after the election.
What happens to the curve?
We will certainly, it will be interesting to see if the curve does not fully uninvert before the Fed cuts rates, which would be, again, unusual, but we don't normally talk about it.
Front rates are coming down?
It would be because they're all coming down.
Everything's coming down, but the front's coming down faster.
Yeah, indeed.
Even though it's had a pretty chunky move to begin with, but still,
It
a lot more
has,
to go.
but again, if you start to factor in, I remember when they were raising rates, that Powell said unusually large rate hikes. That took me back to The Princess Bride, rodents of unusually large size. It'll be interesting to see if we have unusually large rate cuts.
All right, Danielle, you did some time at the Dallas Fed, and I'm looking at some of
It
your
sounds
notes.
like I did time at an institution.
Yes, you did time. You did your time, and now you're free. You used to have something down there called the Dallas Fed Manufacturing Uncertainty Index. That's pretty cool. What does it tell you? What is some of the recent data telling you there? Because you always come up with data sets that I've never heard of.
We are seeing unprecedented levels of uncertainty. Hats off to Emily Kerr and her team at the Dallas Fed. They introduced kind of a National Association of Credit Managers index type of question in their most recent survey that came out on Monday. People are not paying their bills. I mean, companies are not paying their bills, and accounts receivable are being stretched out. So these are kind of credit managers' signs that, hey, there's real distress, and it's harder to get credit, which we've been hearing, right, from smaller businesses especially.
Yep.
Is it sector specific in what you're seeing, or is it just maybe like how big those companies are specific?
What was interesting about this, the introduction of these new types of questions, is that they asked manufacturers, servicers, and retailers, and it was retailers that were seeing the greatest degree of distress.
All right, so you believe...
And remember, this is the 8th largest economy in the world, and the 8th largest exporting nation in the world. Texas is a standalone. It is. So,
and then to that point, like, there's a huge amount of products that get shipped out, right? Like
that's right. That's why it's the largest exporting nation, larger than California.
Yeah, and it has a huge medical department too.
You guys are staying with us, though, right?
We 20, 30 years ago, you could say that we were an energy-centric economy in Texas. That's no longer the case. Very diversified.
But you're staying with us, right? The United States. You guys are,
yes.
Okay, good.
I
always have to check in every once in a while.
Just not their grid.
There is secession talk. Texas was once a republic, but I think we're staying with the country.
Is that data set, though, at all distorted by hurricanes, et cetera, that you saw?
No, actually no. And that was, again, what was so fascinating was that it was so broad-based across the service sector, across the manufacturing sector, and across the retail sector. And again, they do some really, really good research as well that front runs the senior loan officer survey on a national level. And that's also showing that it's very difficult to access credit right now.
You believe we're actually in a recession, is that correct?
I do. And Anna Wana actually kind of agrees. She also thinks that net job cuts began last October. What's fascinating is that when we got the revision out last week from the Bureau of Labor Statistics, it said in its assumption about business deaths. We know what business births were with the birth-death adjustment. We still have yet to have them report business deaths. Their assumption was that small businesses became additive, that fewer small businesses died in the fourth quarter, when actually we saw small business closings rise appreciably from the third to the fourth quarter. The risk is, the reason I'm going into these details, the risk is that we see a second quarter of negativity in job creation, net job losses. If you see that for 6 months, because the Bureau of Labor Statistics has already said we lost 192,000 jobs in the third quarter of 2023, if that stretches to being 6 months in a row, the National Bureau of Economic Research, the Business Cycle Dating Committee, they're going to have a hard time saying 6 months of job losses doesn't constitute recession.
So when we get the jobs number on Friday, how do I look at that number then? Because obviously, like, the headline print is going to be up, right? But you're saying that on a net basis, like, what should I be keying in
again,
on?
I mean, Powell said it himself at the last FOMC that payrolls are overstated. And if you get a number that was originally 494,000 after the revisions that we hear from the BLS, but after the census comes in and gives us actual headcounts from companies, and that 494 with a plus sign in front of it turns into negative 192,000, it's a significant amount of downward revisions, which my mentor at the Dallas Fed told me you always see at inflection points.
How long do you think this recession will be? Because it feels like it's almost a bifurcated economy. A lot of folks would say, I'm not feeling anything. I've got a job,
we have
I'm good.
I mean, it's like super K.
Yes.
It's super K-shaped economy.
Okay.
I mean, think about how many people at the top of the K are feeling the benefits of having gotten 5.5% on their cash for this long.
Yep.
And yet we're hearing that inflation's becoming more problematic for the lower income earners. And what that is a sign of is, again, what we saw with the employment cost index today. It's that wages are increasingly not keeping up with the cost of living.
So it's not just the Fed today, mostly the Fed, but we got the BOJ finally hiking rates.
Indeed.
The press are looking
back
a little
to
bit
the
more
1990s.
hawkish,
Woo.
totally. We get the BOE tomorrow. The ECB's already delivered one cut. Do you think that, how do you think that cycle will all play out in terms of, I mean, the majority of them are cutting, right? But they're going to cut differently and at different times, and the BOJ is hiking. How does this all play out?
It's interesting that you bring this up because there is so much disparity right now across the pond. We unexpectedly saw Germany fall back into recession a few days ago. Nobody was expecting that. They're speaking of exporting nations, they're the world's third largest exporter.
China.
And it's a reflection of China, exactly. So the breadth of the global recession, when you say, okay, Asia's in recession, okay, Germany's in recession, okay, the United States is in recession, that changes how aggressively each individual central bank can behave. And when the Fed finally does go on September the 18th, then the rest of the world will end up falling in line.
Danielle, thank you so much for joining us. Really appreciate it, as always. Danielle DiMartino Booth for a little bit extended period here on Fed Day. She is the CEO and Chief Strategist at QI Research, based in Dallas, Texas, but we got her here in our Bloomberg Interactive Broker studio today. My stat was Texas' 8th largest exporting economy. That's pretty cool.
Yeah, really cool.
Awesome.
And that's not even counting, I mean, Louisiana also has exporting facilities, but that's not counting all the new facilities they're trying to build too in terms of exports and stuff.
Very cool stuff.
Obviously, I'm talking LNG and oil exports, but still.
Oh, no surprise
So
there.
shocker, I know, that's surprising to Paul Sweeney. Coming up, we are going to talk about politics. So there is a new poll, Bloomberg News Morning Consult poll, that shows Kamala Harris has just wiped out Donald Trump's lead across 7 battleground states. We're going to dive into this, how it winds up playing out in the election, who's voting, who's responding, all that good stuff coming up right after this. This is Bloomberg Intelligence. Happy Wednesday, happy Fed Day.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Rally on today, especially when it comes to technology. You're going to let the chips rise where they may. AMD shares rising after the chip makers adjusted earnings per share and revenue beat analysts' estimates. Right now, it's up 6.3% off the best levels of the session. Analysts were positive about the sales boost from its AI accelerator. NVIDIA, those shares, they are up over 10%, close to 11% right now. Renamed the top U.S. chip stock by Morgan Stanley analysts for the first time in 6 months. That follows a recent sell-off that the analysts there see as providing a good entry point. Still need to hear from Meta Platforms tonight, the next of the magnificent 7 cohort of stocks. We did hear from Microsoft after the close yesterday. Those shares, as a result, down in today's trading, 1.4%. Another report from the Labor Department showing employment costs moderating during the second quarter. That's Fed-friendly. That data tracks wage and benefits coming ahead of today's Fed decision. 2-year yields right now unchanged, 4.35. The 10-year, 4 basis points lower at 4.09%. The S&P 500, 88 points higher. That's a rise of 1.6% at 55.25. The Dow Jones Industrial Average up 173 points, and the NASDAQ 100, 517 points higher. That's a rise of 2.75%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live. That's the video thing, youtube.com, search Bloomberg Podcast, and that's where you will find us. All right, Kamala Harris has wiped out Donald Trump's lead across 7 battleground states as the vice president rides a wave of enthusiasm among young, Black, and Hispanic voters. That's according to the latest Bloomberg News Morning Consult poll. Some pretty big news there on the political front here. Let's check in with Laura Davison, Bloomberg Politics editor. She joins us here via Zoom. Laura, this seems like a pretty good start in terms of momentum for Vice President Kamala Harris. What are some of the key takeaways from this poll?
Yeah, so this poll we've been doing since last October in all of the 7 swing states that are expected to decide the election. And this is the best that the Democratic challenger to Trump has ever done. This is the first time we have polled Harris. It's a statistical tie, essentially, between the 2 candidates. She's technically up 1 percentage point, but that's within the margin of error. The other key takeaway here is that Black voters, young voters, Hispanic voters are much more likely to vote now that Harris is on the ticket. So this is, been something that the Trump campaign has created their strategy around of trying to get, pull away at the margins some Black voters, some Hispanic support. But this would indicate that perhaps the tides are shifting in Harris's favor on that front.
Well, that was sort of one of my questions, too. Are these voters that are switching, or are they new voters that are swinging these polls?
So we don't yet know totally what that is based on how the poll works, but what we see is that voters who are unsure if they're going to vote are now saying they're much more likely that they're going to vote. So these may be people who voted in 20, who were not enthused by either candidate, who are going to stay at home, or people who maybe have never voted. But, a turnout election is expected to help Harris on this front versus Trump. The Trump folks were, sort of hoping to pull away, particularly Black men, Hispanic men. But, we're not hoping to see a big surge in turnout that, really helped Biden in 2020 and could potentially help Harris in 24.
Laura, as a former Wall Street person, I tend to follow the money. And Vice President Kamala Harris has had a pretty good run here in the last week or so raising money. Do we know where that money's coming from?
Yeah, so her campaign says they've raised about $200 million, and that's in the first week or so of the campaign. This is largely from small dollar donors. These are people who are going and giving online and, increments of, anywhere from, just a couple dollars to, up to a couple $1,000s. We've also know that her super PAC, this is the group that can accept money in unlimited amounts, has gotten $150 million in commitments since Biden has dropped out of the race. These big dollar donors, people who give millions of dollars, had decided to withhold a bunch of contributions, in order to sort of pressure Biden to get off of the ticket. So now that money is coming back into the fore. Just for, kind of some comparison here of Harris, when she inherited the Biden campaign accounts, it had about $100 million. Since then, she's raised another $200 million. So these are really big sums.
how much of this could be also attributed just to momentum, as in when you have the RNC, the candidate gets a boost, the DNC provides a boost. This is an unprecedented moment in political history, so no doubt the candidate would get a boost.
Yes, and the timing here is all really interesting because, of course, Biden just dropped out 2 days after the RNC. So Trump was expecting to see a big polling boost coming out of that. Of course, just a week prior, that had been the assassination attempt. Leaving the RNC, Republicans were very confident about their chances. And, even Republican operatives were saying one of the things they needed to be cautious of is that they weren't overconfident. Of course, that all switched, just a couple days later. What the Trump team is saying is, look, this is a Harris honeymoon. This is a surge in momentum that will just be a flash in the pan and won't last until November. That's really what we'll be looking for in the next couple weeks. Of is she able to maintain both this fundraising edge as well as this polling edge, or do we revert to where the Biden-Trump race was, just with Harris on the ticket in a couple weeks?
How about debates? Are Kamala Harris and Mr. Trump, are they going to debate, and if so, when and how many times?
This is a really big question. So Trump and Biden had agreed to a second debate on September 10th. It was on ABC News. It's very unclear if that is going to happen. Harris has said she wants to do it. Trump has, suggested that he probably will end up debating her, but has thrown a couple wrenches into the system. He says he doesn't really like ABC. He's called them fake news, and said he'd prefer someone like Fox News to host the debate. He's also said he doesn't need to debate because he's already well known and people knows what he stands for, and he doesn't, feel a need to do this. This is going to be an ongoing negotiation. There's also the question of whether there'll be a VP debate. Trump and Biden had also agreed to do one, before the switch up in the race. Harris is still in the process of naming her VP, so we may hear more about that in the coming weeks.
What do we make about the situation in Israel and how that polls, how that is polling for Kamala Harris? Because clearly there is a huge section of voters that is very unhappy about what's happening in Gaza, right? That we're maybe not voting at all for President Biden. But are they coming back in now? Do we know anything along those lines?
Yeah, so what this poll shows is that people who are very concerned about the Israel-Gaza war, and particularly young voters for whom this is a bigger issue, are more likely to vote for Harris. She's taken a softer tone on this. She's been more sympathetic to the humanitarian situation in Palestine, and is, just doesn't have quite the same negatives on this issue that Biden does. One of the things, particularly just with the, events of late of, kind of there being more unrest in the Middle East, is, the Biden administration is still pushing for a ceasefire. Harris is still pushing for a ceasefire. Democrats really want this to be an issue that is working towards a resolution versus, an issue that's flaring up, particularly as students go back to college campuses in a couple weeks. They don't want to see the protests that we saw last spring.
Do the Republicans have buyer's remorse for J.D. Vance? I'm seeing some reporting along those lines.
Good question.
Yes, there's a lot of conversations on that. Even on a Bloomberg television, Mick Mulvaney, who's a Trump ally, came on earlier this week and said, no, they're not looking to replace J.D. Vance. But of course, if you're being asked about this, this means that this is at least a conversation that is circulating. Vance has had a rough rollout, just in about the, 2 weeks or so that he's been on the ticket. Some past comments he's made, sort of degrading childless cat ladies have come up. He has had some jokes on the campaign trail that have come across as crass and haven't really landed. So this is a conversation that's happening on upon the sort of Republican, elite, the mainstream Republican class, but isn't really reaching the Trump campaign. They have continued to say, JD is our guy, and we're going to stick by him.
Well, is there an equivalent for single cat ladies for single men? Like, is it single men dog owners? Like, I'm not trying to be funny. I'm genuinely curious.
They're called bachelors.
But
eligible bachelor, it's a whole different vibe.
But that's okay. Like, that's a different vibe.
Exactly.
But like, if you're 45 and you have a dog and then live at home and not married, that's still fine.
I think maybe a gamer would be the equivalent there.
A gamer. Okay. So childless cat ladies versus gamers. It gets complicated.
All right.
Hey, Laura, thanks a lot. We really appreciate it. The poll was really interesting to kind of comb through there. Laura Davison, a political editor for Bloomberg News, joining us from Washington, D.C. They also made the great point in the article that a lot of what President Trump is very good at is putting down opponents.
Right.
But having that with Kamala Harris is very difficult when you're also trying to draw over women and you're trying to draw over African Americans.
Yep, tough one. And I don't remember growing up that swing states literally decided the election. You don't even go to the other 44.
It's kind of the same thing.
But it back in the day, I thought California mattered, New York mattered, Texas. I mean, now it's just if you're not in those swing states, you're not going to see the candidates, I don't think.
Yeah, which is also interesting when you talk about the VP and sort of obviously Pete Buttigieg has the most exposure because he's already in the White House, but that was interesting. All right, coming up, John Butler, Bloomberg Intelligence, will break T-Mobile earnings down for us.
Company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. The popular deli meat company Boar's Head, this is important, recalling an additional 7 million pounds of ready-to-eat products made at its Virginia plant. This is an investigation into a deadly outbreak of listeria and food poisoning continuing. The new recall includes 71 products made between May 10th and July 29th under the Boar's Head and Old Country brand names. Follows an earlier recall of more than 200,000 pounds of sliced deli and poultry meat. The new items include meat intended to be sliced at delis, as well as some packaged meat and poultry products that are sold in stores. They include liverwurst, ham, beef, salami, bologna, other products made at the firm's Jarrett, Virginia plant. The recall is tied to an ongoing outbreak of listeria poisoning. Already killed 2 people. Comcast, NBC Universal saying advertising revenue for the Paris Olympics and the Paralympics surpassing the record $1.25 billion sold for the Tokyo Games. The strong ratings have translated into greater demand for the unsold inventory that NBC brought into the games. They run through August 11th. The network previously announced $1.2 billion in sales. It didn't give a precise new total. The opening ceremony drawing over 28.6 million viewers. Yo quiero AI. Taco Bell doubling down on AI-powered drive-thrus. The chain planning to roll out a voice AI system to hundreds of U.S. restaurants by the end of the year. And the chain declined to specify how many of the stores are going to have the platform. Automating order taking allows workers to focus on other tasks, like correcting the orders that they screwed up. No, I just added that. Anyway, that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday. Happy Fed Day. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, analysis, and economics through our lens of our Bloomberg Intelligence guys. They cover 2,000 companies and 130 industries all around the world. Let's go to one of them now. John Butler. He's our senior telecom analyst for Bloomberg Intelligence. He joins us from Princeton, New Jersey. Want to focus here on T-Mobile. That stock up almost 4%. The wireless carrier reported post-paid net customers for the second quarter that beat average analyst estimates. What is T-Mobile able to do that its competitors just cannot seem to be able to do?
You know, it just boils down to this, Alex. They lead in 5G. And for any wireless carrier, the lifeblood of the network, the speed of the network, the download speeds that you get on your phone is dictated by how much spectrum you own. In plain English, how fat are your airwaves? And the great news for T-Mobile is they have the most spectrum of any of their competitors, and they have the right amount of spectrum for 5G, and we're now seeing it translate into better results.
And I'll note that our own Charlie Pellet is a very happy T-Mobile customer. Oh, you
I'm
too
T-Mos.
as well? Oh,
I'm
you're
T-Mo.
too? Okay, very good. I didn't really know any. You're probably the only two I know, which says something about the circles I run in. John Butler, so is this just a share game, John? I mean, everybody's got a cell phone, so is this just a share game between AT&T, Verizon, and T-Mo?
It is, Paul. You know, it's really, in a way, become a zero-sum game in some ways. There's natural organic growth as, you know, young kids get phones, older people have been getting phones post-pandemic here. I think that really shook up enough of the market to lead to that little bit of growth on the edges. But the bottom line is it's a very slow growth market. And so it's all about not only protecting your share, but taking it away from your competitors. And T-Mobile has, you know, people forget that really wireless is almost a retailing game, right? So it's all about branding, and T-Mobile has done a brilliant job manufacturing a brand image that's all about being consumer friendly and low prices. And so quarter in and quarter out, they tend to lead their peers, AT&T and Verizon, in terms of net new subscriber growth. And this quarter, in my mind, they really hit the ball out of the park on that front.
At some point, will I also get my internet from T-Mobile? Like, is this the next area that they can just start gobbling up share?
Possibly. Actually, if you live in New York, I would say a definite maybe. They've been very cautious in terms of managing expectations for where their broadband business is going to go, but T-Mobile offers both over-the-air broadband called fixed wireless access. You basically put a modem in your window, it talks to the wireless network and provides you broadband that way. It's a real set-it-and-forget-it thing. It's been a major hit with consumers. Verizon is also a major player there, but T-Mobile is also getting into fiber broadband. And when you think the future of broadband and where it's headed, it really is going to come down to fiber in the long run. So I think they're placing the right bets. They're moving ahead with fixed wireless access for now because they have excess capacity on the network, but they're reluctant to really ramp up expectations there because broadband eats up a lot of that spectrum we were talking about on the network. So they don't want to endanger their core wireless mobile business by rolling out too much in the way of broadband over the air. But I think fiber hedges their bets there. And by the way, they over-index in New York. They really have great share in New York in mobile. So I think broadband is their next foray for that market.
All right. Hey, John, really appreciate it. John Butler, Bloomberg Intelligence Senior Telecom Analyst, joining us on Temas. That stock is up. All right, we have another hour coming up of Bloomberg Intelligence Radio. We're going to break down all the markets for you and talk to the global head of distribution for TCW.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on the markets. Jess Metton is going to join us here in studio. She covers all that for Bloomberg News. Jennifer Grancio, global head of distribution at TCW, on the outlook for ETF. Let me guess, it's going up. David Regnery, he is Train Technologies CEO. So we're going to get the latest on Train's earnings and their outlook. So all that is coming up in our C-Suite special there. Right now, let's go to Mr. Charlie Pellet, who's going to kick this hour off.
Hi, thank you very much. And here's what's going on, Paul and Alex. We got stocks ripping higher. Fed Wednesday, the Dow, the S&P, NASDAQ 100 index. Look at that, up 2.7% right now. We've got the S&P, to put it all in context, up by about 1.6%. The Dow holding on to a gain of 0.4%. NASDAQ up by 2.4%, so quite the rebound from this time yesterday. Our Jess Menton's going to have a whole lot more on the markets for you coming up in just a moment. 10-year, 4.10% with a 2-year 4.35%. Spot gold up 0.5%, 24.23 the ounce. West Texas Intermediate crude up 3.1%, back above 77 a barrel, 77.02 on West Texas Intermediate crude. Stocks staging a rebound amid a rally and beaten down chip makers, with the latest economic data bolstering bets that the Federal Reserve will be signaling a rate cut in September. Yes, we will have the Fed decision, 2 o'clock Wall Street time, and of course, Jay Powell's news conference, 2:30 Wall Street time, right here on Bloomberg Radio. As for the broader tech earnings landscape, Emily Rowland is Chief Investment Strategist at JH Investments. She was interviewed this morning on Bloomberg Surveillance.
It's the show me the money kind of period right now for tech companies. And again, the earnings are there. Yes, it's a multi-year process to fully monetize the investment that many of these companies are making in AI. But we're going to get there. A lot was in the price. The valuations were extended. It doesn't surprise me that there's a little bit of profit taking in tech right now, but we remain overweight, and we think it's a healthy little mini correction here.